Welcome to the Baby Bull Club. We're back again, and there are no stupid questions on the Baby Bull Club, just really expensive ones. So we are here today with our local friend, Dean. And Dean is going to tell us a little bit about himself.
So I'm Dean. I'm 33 years old, just turned 33 last week. I'm married to my wife. We've been married for about 5 years. Got married actually twice, but that's a different story. And we have a newborn, 5 months old. Right now we live in North Dallas, but soon we'll be moving to Frisco, Texas. I currently work as a data analyst. My wife is a nurse. Currently not working, staying home with the baby, giving her that opportunity. That's about it. And I enjoy personal finance. I enjoy investing. I'm really about, watching all the latest and greatest, but definitely don't follow all the trends. I'm a Dave Ramsey guy, I'm a Money Guys guy, I'm a Caleb Hammer guy, I'm a Ramit Sethi guy. So I listen to all the personal finance gurus that are right now very popular. But definitely I'm more of a build for the future type of guy too.
Great. It's good to have you here, man. Excited. Well, let's do the official. The passing of the bull, because you're going to give us lots of bull. So you hang on to that bull, and I'll take it back from you later.
Love it.
That's the official passing of the bull. All right, what else we got here? You told us about yourself. This next piece, the first part we go into is trading campfire.
Trading campfire. Trading campfire. Trading campfire.
Okay.
Trading campfire is where now your situation is interesting, right? Mm-hmm. Not a heavy duty trader, but you know a good amount about it. So we'll just play with this and have fun. And then we're going to talk about all the important finance stuff that you all need to hear right after that. So the trading that you did, I guess we could even modify this. Tell us a little bit how you got into trading, but also tell us how you got into what you're doing with finance.
So I've always been interested in personal finance, but I started a bit later than most people. After I, had an actual appropriate adult job, I realized, okay, I need to start thinking about what's going to happen 10, 15, 20 years down the line, not what's going to happen tomorrow. So, I started looking into, first of all, Dave Ramsey was sort of my first introduction into personal finance, getting out of debt, not owing anybody any. For example, I don't have any credit card debt. I don't have a car note. I don't have any student loans, nothing. Debt-free completely, which is fantastic. And a lot of people don't realize that, you basically keep everything you earn and you can do whatever you want with it.
It's immense.
And then once I started getting into that process, then I was like, okay, how do I invest for the future? So I started looking at, the 401k, the Roth IRA, and what are people investing in those? So, it's S&P 500, very basic stuff. I have dabbled a little bit into single stocks just for fun. One of the better trades I did, and I'm mad I didn't put more money in, was I actually invested like a ton in, I invested in SoFi, like the banking app. Yep. Fantastic trade. Bad thing I did is I didn't put more money in, and second of all, I left too late. I think I doubled my money, and then I waited. I was like, oh, maybe it'll go up again, and then the stock crashed, and then it went back to more or less of what I bought it for. But it is what it is. Where
were they at when you bought it?
I think I bought them at 15.
Right.
I think now they're at 17.
Yeah.
But I think they got up to 30 something, and I didn't. And I was like, no, you know what? I'm gonna hold, and I held, and big mistake. But it is what it is.
There is a massive online cult of folks that are still waiting for SoFi to come back. There's a whole Reddit group about it. There's just people that are absolutely convinced that SoFi is gonna.
It's a great company, but I feel like we're really overvalued. Yeah. I have a friend that's really into the whole PE and all this stuff. He's like, I just buy stocks that I like the companies of. I bought, for example, Apple for my wife's Roth IRA because she likes Apple. Right. So I'm one of those. But SoFi I really like. And he's like, yeah, they're way overvalued, crazy. Huh, but cool. So their PE is I think 3 times or something, or 4 times something that banking shouldn't have. So
really?
That's why they I think they're crashed. But it's a good stock. I like it.
Right. Which is, it seems strange because their whole philosophy is kind of keeping it all online, keeping it cheap, right? You think they would be able to get a really
and
low
they made
PE.
a lot of money. They're hitting earnings, they're beating earnings. Because I follow them a little bit. So they have more memberships every single year, every single quarter. So I don't know why their stock isn't going up. So, but
That's a weird
it's
one.
going to be banking.
I always read about this one problem that they have, and I thought it was the weirdest thing ever. And maybe like they're outsourcing in a way that I don't understand or something. But like with their credit cards, like if you cancel their credit card, you can never get their credit card again.
Really?
Yeah.
That
Like
I didn't know.
if anything happens with you and their credit card, like even if it's completely on the up and up, you can never get another credit card.
I heard
from them.
their customer service isn't great.
This is like lots of this.
I bank with them, so this is not sponsored or anything, but I bank with them. I like them. I even pay the monthly. There's like a $10 monthly fee that you get 4.5% APY
Really?
up to 20 grand or something like this, and I have more than that, so I throw it in there. So I said, it's free money essentially, because I think now APY is like 3%, so I make that spread, which
Right.
ends up being much more than $10.
Yeah.
I use them, and I heard that some people have issues using them, like actually drawing out money and cashing out. But I've transferred money, I've purchased stuff with their debit card, like I've never had any issues. So I don't know. I don't know what's going on with
Well,
them.
it's nice to actually meet someone who has real life experience with it.
Yeah.
I see lots of stuff online. I've been tempted to get involved
Yeah.
because they have the higher APY
Yeah.
that you can get, and I've been looking for a high yield that I wanted to use besides for the credit union that I use, and it's something for me and my wife together because I only have my own, and I was tempted to go there, but it just seems like it's one of those decisions that I could never quite make.
Well, you have to have a traditional bank. I bank with Bank of America, which is another story on its own. A lot of people are like, oh, big bank's bad, but Bank of America, they're everywhere. And when we move, later I'll get into it, but we moved back to the US and I had to think, okay, what bank is everywhere? And Bank of America, they have branches and ATMs everywhere. So I obviously have a traditional bank, and SoFi is just for savings account that I have. And if you end up opening one, I'll give you a referral code because I guess we both get money if we do.
Right. Okay. Let's do that. Let's do that. All right. Cool. So and how did you get into what you were doing financially, like what you do for work? How did that come up?
So in college, I have actually a degree in economics and management, and then I specialized in information systems. And I did that instead of like accounting or banking or whatever, just because I wanted the flexibility of being able to live anywhere I wanted, and information systems technology. So if you learn how to code in Python or SQL or whatever, you can work here, you can work in Europe, it doesn't really matter. So I wanted that flexibility. So right now I work as a data analyst, and primarily just because, every company now, and whether it's tech or retail or restaurant industry, everybody needs them. So there's just work everywhere, always. And I always recommend people not to look in tech companies because they're awful.
Absolutely. Absolutely. That is half of my first life is IT, and I've been into computers since I was a little kid, and then I wound up doing programming for 20 years.
Oh, wow.
And then I just left a directorship role at a school dealing with their IT, and there's something you never want to do as coming from a developer's standpoint. It's just...
The biggest mistake I made is when I was in, I think it was like 6th grade. So this was more than 20 years ago, 25 years ago. My dad was like, you have to learn how to code.
Right.
And I said, Dad, I don't care what you say. I'm a kid. I don't know anything about computers. Probably the biggest mistakes of my life, because I could have been already multi-millionaire by the age of 33 if I had taken that path instead.
Yeah, but
Always listen to your parents. Always, no matter the age.
I'm gonna go ahead and back that. I'm gonna second that. Well, cool. That's all really interesting. Yeah. That's fun. So tell me more about in finance, what exactly, can we go a little deeper into that, into what you do on a daily basis and what that's like?
So I'm first of all, very simple, always invest 401k. 15% of my paycheck always goes out straight to 401k. I invest, in S&P 500, I invest a little international, small cap and mid cap, always. Before I even see the money, always goes there first. Secondly, I actually have a second job on the weekends. I use that primarily for after-tax investing. So I do a lot of, I open up a Robinhood account, threw some money into things I liked. I put a little gold, a little silver, I put in VTI, which is like the broad index fund. So you get a capture, it's a little bit safer because you are capturing the entire US market and not just the top 500 companies. So you get a little bit of technology and a little bit of this, but technology usually obviously is heavier. NVIDIA, Apple, things like that. Little QQQ I do like, which is just the tech ETF as well. And that's what I do sort of on the side for like just extra money. And, you know, I'm using that actually now to sort of start building up like a house fund, because at some point I do want to buy a house. So I use that. And because, you know, you get a better rate of return on your money, especially if it's a longer term, 3-5 years out, you'll probably get a nice, you know, between the 7 and 10% return on that. And right now I'm up this year, like something like 10% or 15%, and we're halfway through the year. So, so I've been, you know, that's what I primarily do.
Cool. Excellent. All right. So as far as, and I guess this is, you know, once again, interesting from your standpoint, but this could be just overall finance, you know, and improving your whole, your situation, and also stock wise. But what was the first, and it says trade here, but you can put this however you want. What's the first trade that made you think, maybe I can do this? Maybe this is going to work out for me?
SoFi. For
SoFi?
sure.
Yeah.
Yeah. When I did that, I was like, oh, maybe I should put more in.
Right.
Luckily, I didn't put more in, but I thought about it and I was like,
I probably would have just stayed for a while.
I was
anyway.
like this. There's another one that I didn't do, and I'm really mad about it. Now, this is crypto, and crypto is kind of like, I don't really do crypto. I had a little Bitcoin and stuff, but I sold everything off. Is Solana, if you're familiar. I saw it when it was like $1, or I think it was between like $1 and $6 or something. Now it's at like 20 something, and I always am like, when I saw it, I was like, should I buy some? I don't know, and I should have, because now it's like I don't even know what the price is today, but I know it's more than when I first saw it, and so I'm always sometimes being like, oh, I could have probably done it, but I'm very risk averse. So, but the SoFi trades was like something that I was like, oh, maybe I should buy more. Maybe I should try other stuff.
Right. The crypto thing is, you know, and we talked about this with the last guest. I don't know if you watched all that, but I have a problem with crypto.
I don't get it.
I get it. I think I get it. Like,
well,
I
think you get it. Right? I get what it's for, but no one's using it what it's for.
And that's it. And we don't, you know, if you look at like Forex, like the Forex exchange does not work like the way crypto does. Like, crypto is like Forex pretending to be the stock exchange.
Well, yeah,
it's like, and I've heard someone call crypto, it's their horse betting for nerds.
Yeah.
And it's like, but they all don't really represent anything. There's nothing behind it. There's nothing that, like, what are you betting on?
It's the belief that
you're just betting on other folks.
And I do think there are people, like, I think the founder of Ethereum, for example, really believes, he's like a hardcore socialist, like he gives all his money away, and I mean, he really believes that money shouldn't exist in how it is today. So he actually does believe it. But I do think a lot of companies are just pumping out crypto as, instead of doing an IPO or raising money, they hope that the crypto is going to actually exchange that. I think Ripple is like a great example that, you know, I mean, Ripple at some point probably could be something, but I mean, they are in litigation with the SEC and they have a lot of issues, but I think they're just using that to fund whatever projects they're doing.
Right. And even that one, I understood where they were going with that, where they were trying to be this transitional currency, right, to go in between things. But my thing is, like, well, why? It's a tool. What are you betting on there?
Yeah.
Like, even if they do use that as a transitional currency, it's still just a transitional currency. It's not anything that anyone's going to be hanging on to for any amount of time, for any reason. So what would be the point of investing in it and waiting for it to go up? Why would it go up? What's going to cause it to? It's just this intermediary thing that I don't really understand. I probably have like $200 total in crypto.
Yeah, I think I have
it's purely because it's like of curiosity and like, you never know, right? But it's like anything beyond that, I just can't bring myself to.
I had also 200, and I recently actually just sold everything because I was like, I don't understand. It's just going down.
Right.
I'm losing money on this.
Right.
And it wasn't a big deal. You only lose money when you cash out, so never cash out of anything. But but I just don't get it, because what I don't understand is this: if I buy something with Bitcoin, I go to a restaurant, they accept Bitcoin, I give them whatever. Let's say a full Bitcoin was $100. Let's say, I give them a Bitcoin. Now Bitcoin price goes to $200. So does that restaurant now have $200 on the Bitcoin? Like, so.
Right, because it's always being played against the normal dollar.
Exactly. So like dollar is a dollar is a dollar, but Bitcoin is not. It's not like, so that Bitcoin is now worth more, it could all of a sudden the day after I paid $100 in Bitcoin, that restaurant now they have $200 if the next day it doubles.
Right.
So like,
Right.
do they? And then they have the Bitcoin. What can they do with it? Like they have to now go to a Bitcoin ATM and cash it out or whatever. I don't know what they do with it.
Right.
Also, all the crypto scams and stuff. That's crazy too.
Well, that's the thing. It starts to look like it really helps the criminals a lot.
Yeah.
I mean, it's very beneficial
Which
for them.
again, I'm more like libertarian. I'm like, listen, if you want to like do something illegal and you want to use crypto, like you do you type thing. But like, I don't get it. I just don't understand it.
Right. And and let me suffix this with I say I understand it. That's not probably the right verbiage for that.
I don't understand.
I don't understand it. I understand enough to be dangerous, probably, right? And if there could be, this is not financial advice. I'm supposed to say at the beginning of this, right? So this isn't, but
Not
like,
financial advice, definitely not.
from a wanting to be a responsible father and someone who's been in this scene for a little bit and investigating it all. Kids, be wary of crypto.
Yeah,
like
I get if you're like in a war-torn third world country and and that's the only way you can make payments securely and safely. Then I can see. But if you live in like the United States of America and you just don't want the government to see your money, they know what you're doing. You don't think they don't know? Of course they know your Bitcoin wallet. Like if they wanted to, they'd find it. They found the guy that ran Silk Road within like 2 years of him doing it, and he had a ton of crypto. So like they're gonna find you if they really wanted to.
If you're new to this and you have $1,000 and you're looking for a place to put it, I advise you to not put it in crypto.
S&P 500.
That's probably a great place.
VOO.
One of those is a great place to start. And it was why hand with funds is like they're gonna do things that we can't have any guarantee that crypto will do. Yeah. And not that any of it's a guarantee, right? But crypto's kind of I don't understand what is the thing behind it that drives all of them going up and down.
Well, it's a hype and stuff. So I do. It's sort of like the dollar. Like that the dollar is going to be worth X. So I guess Bitcoin is not like that because you don't know what it's worth. Like because you can't use it to buy anything yet. Right. Like in your day to day. Yeah. And we're sort of Bitcoin's been out for what, like 15 years. And like this is like they still haven't gotten to it yet, so that we can I can't go to a store and scan, and pay that way. Still can't do it. So
the other question I have too is like we have all these big governments and everything. They're all like buying up.
Well, El Salvador is like they changed their whole monetary to Bitcoin. Like,
really?
Yeah. So they're doing actually they bought a ton of Bitcoin. A ton, because he's like 35 years old and he's trying to be hip and cool. He's the one that is locking up like all the gangs and stuff. So I think he's trying to change the country, and I know that he bought up a ton of Bitcoin, and I think they are trying to use it as like a regular currency, like in the country, because their money's not worth anything. So I think he's trying to at least get something a bit more stable, and it's I think it's hard to get on the dollar. Because then your money's worth less, even if so. I think he's trying to like get something more stable. But
That's curious. Well, that's interesting.
But it's just funny because anybody can open up a cryptocurrency, which I think there's a whole website dedicated. I think it's called like Pump or something like this, and it's a website where you can just type in the name of cryptocurrency you want, and it'll be created out of thin air. So there's a really viral video that went out of some like 15-year-old kid that basically. He made 20 grand off the website, and then because he like pumped the crypto that was fake, and he like he cashed out and got 20 grand, and then he like made another one called "I'm sorry" or something coin or something like that, something weird like either like this is a pump or like "I'm sorry" coin, and he did it again. He made like another like 10 grand or something like this, and people buy everything. If you go on like, there's another really good YouTuber. Steven Carousel, I don't remember his name, but he does like a lot of like deep dives on like scams and stuff like this, and a lot of them are crypto scams, a ton of them. There's the Logan Paul scam that happened where he had like all the shit coins and meme coins and all that stuff, and he made a ton of money, and Doink or whatever like that. And he also had like the Pokemon. He did a whole. He hired designers, and I think he made a coin out of it too. And he was going to make like a card game that was essentially based off Pokemon, but the idea was that you could play and earn crypto while doing it.
Okay.
So he sold. What they do is they front sell to like private investors, like 80% of the crypto. They release it, the crypto goes up. and then all the people that front sold it
Cash out.
got out. Like the Haktua coin, same thing. You know,
Right.
Haktua, the girl that did it. Yeah, so she also gave a ton of money to the investors. It got pumped. They made the bag, and then it crashed to like $0.00001 or whatever, like that. You know, so like. You gotta be wary. Don't believe anything on the internet, especially
Be
like
careful.
influencers.
Be careful. Spy. Invest in Spy.
SPY, SPY, VOO, VTI.
Yeah.
That's it. Nothing else.
No poop coins. Leave them all alone.
Apple. If you're going to invest in single stocks, do Apple, Microsoft,
Apple's a good
Nvidia. Apple's fantastic. I love
Yeah.
Apple. I love Apple stock.
Yeah.
When Robinhood gives you a free one, Apple. Tesla, so. It depends. Tesla's like a hit or miss, I think. Some people, you know, there are Tesla, like people that are like religion on Tesla, evangelicals or whatever they're called. So that's all they invest in is
It
Tesla.
fluctuates so much. It's
Yeah.
fun to play on the market.
Yeah.
If you're looking for.
I had a
gain.
friend that made a ton of money on Tesla.
Oh, you
a
can-
ton.
yeah, you can
He
do
made,
it.
I think he doubled the money on Tesla. There were people I mean,
Right.
I was listening to a call on a Dave Ramsey show that this lady bought Tesla like 15 years ago for like $1,000, and now it's worth like $500,000 her shares, which is insane. Like, what are you gonna do? Are you gonna sell it? Are you gonna hold it? I wouldn't even know what to do. I'd be like,
Right. Yeah,
diversify
that's-
maybe. I don't know, but
Yeah, definitely. Shift it around a little bit, right? At least cash out half of it and do something. Get it a little moved around. So, what was your biggest beginner mistake? Once again, with any of it, it doesn't have to be specifically trading.
I think not starting soon enough and like listening to the stuff but not actually doing it. I think that's a big mistake. Is like you think about it, or you know, obviously depending on what country you live in, it's a little bit different. So if you live in a country that they don't have like a way to trade, like in the U.S. where we have all these different accounts and we have Robinhood and we have, you can invest on SoFi, you can invest in Vanguard and Fidelity. If you only have a country that has a pension, try to figure out a way to, you know, invest in, you know, the U.S. broad market, or if your country has a very good stock exchange, do that. I think that's like the biggest thing is starting. I didn't start soon enough. I should have done it in my 20s. Like, what if I knew what I knew now? I would have twice as much money,
Right.
for sure.
Yes. Take that advice, please. That's why we're here.
Yeah.
Is for you to hear that.
And I think it's very cliche to say it, but everybody says it. If you ask someone
Yeah.
that's in their 65 and they have only Social Security to live off of, they're all going to say, I wish I started, you know, investing when I was younger.
Right.
And it doesn't take a lot. And I think the average lifetime earning of a U.S. adult is like $2 million or something like that.
Yeah.
So like, yeah, that's a lot of money, but you're spending all of it.
Right.
So, you know, why not take, if you took 10% of that every single year, 15%, they usually say 15 to 20, 15% of that every single year of your earnings, and forget about it. Put it aside, forget about it, never touch it. You know, even
Well,
if at
even-
65 you get to $1 million, that's not bad.
Even if they did the 10% starting out, at the end
Yeah.
of a few years, they're going to look at that and they're going to want to do more.
Yeah.
You know, so it's just anything. That's kind of my message. Is just get started. You know,
Yeah.
don't be the guy that goes to sleep tonight and says, I want to be an investor.
Yeah.
I want you to go to sleep tonight and I want you to say, I'm now an investor. Even if it's just downloading
Yeah.
Robinhood, throwing $20 in there, or even $5, just on so you have something started.
Yeah.
And you get to see what it feels like to have it grow. And you see how painless it is.
Yeah.
And it's only going to get bigger. That's
So
it.
at my second job, I use that, like I said, like fun money. So at the beginning, it's a little not as consistent because it's like a part-time work. So every week I put 50. But now because I'm more in tune on how my finances are, I don't have a problem if I have money in my account. So for example, on Friday, I got paycheck for that. Got $200, $250. Took it all, threw it into Robinhood and bought VTI.
There you go.
What was I forgot what I was going to say before, but basically you don't want to get to 65 and do this. One of the better advice is also one of really good advice is if you do start at 10%, you can, on your 401k, for example, if you have a job that has a 401k or whatever, or if you don't, then try to remember to do it, is once a year increase it by 1%. It adds up very fast. If you do an auto increment of 1%, you'll, obviously after 5 years, it's another 5% that you're investing.
Nice.
And and 1% compounds too.
Yeah.
So I mean, it can add up to a lot.
Compounding.
Compounding
That's
is
the
the
big
best
one.
thing.
Yeah,
the greatest thing.
we're gonna have a nice list pretty soon of like all the points that we're really trying to hit. But that's like number 2 or 3.
If you ever want to get excited about investing because you're saying, I don't know what to do, I don't know how to do this, I always say to people, if you want to invest, VTI or VOO, easy, S&P 500 or broad U.S. market. You can on pretty much every single app, or you can just type in Google average return. Take that between 10 and 11%. We've had higher years, we've had lower years. The biggest thing is never take out your money. You know, we're gonna have another 2008. It's gonna happen. We're gonna have another .com bubble. We're gonna have another 9/11. We're gonna have another whatever. 2016. We're gonna have another start of COVID, another Iran war, whatever it might be. It's going to go down.
Right.
So make sure, first of all, you're always investing and never take it out. Second of all, if you put in a calculator and say, you know, you're getting an average rate of 10% and you're going to be investing $100 a year for $100 a month for the next 20 years, just see what that is. You're going to be blown away how much that is, or how quickly even that gets to $10,000 or $100,000.
Right.
I mean, it's insane. It's insane just to look at the number. You know, when I look at my stuff and I was like kind of planning out, like, you know, when I look at my account now, and let's say I didn't touch anything, I didn't even add another dollar into my account, and let's say I didn't spend anything that was in there, yeah, I think I was at like 2.5, just me.
Right.
2.5, not including my wife's stuff. So
Fantastic.
it's a ton of money.
Yeah.
That's a lot of money.
It's a lot.
Okay, people are going to say, oh, but inflation. Okay, give me the $1.5 million.
Right. Well,
Give me the $1.5 million.
That doesn't. Those are excuses.
Yeah.
We know that. That's just, you know, for people who just
At 4% withdrawal rate, let's say that's $60,000, because at $1 million it's $40,000. So at, let's say 1.5, it's 60. Let's just do that. $60,000, and it's growing in perpetuity. At some point, you're going to be like, okay, I can even now spend more. And some years you're going to want to take $100,000 out, but $60,000 a year after is probably, if you don't have a mortgage, you don't need debt, nothing. It's you know, it's a nice life. You're going to be fine.
Yeah.
You'll be fine. You can probably live in most countries in the world on $60,000 a year.
Yeah,
like, maybe not LA or New York City, but you know, you can have a really nice life.
But there's a lot of good living out there that aren't those
$60,000
places.
a year, dude. Go to Thailand. Go to Thailand. Go to Vietnam, dude. Do whatever you want.
Right. Absolutely. All right. So I guess we kind of covered your biggest beginner mistake.
Yeah.
Right. That's your SoFi.
Yeah. For
fumble.
sure. Should have put more and should have taken it sooner.
You still won though, but you were there and you
I was
won,
there, yeah.
and you know that's.
I didn't lose money,
That's so
which
much
was good.
more than a lot of folks can say.
Right now, I'm down on silver. I bought some silver, and I'm definitely down on that. And I
Yeah.
don't want to sell because I'm hoping at least I'll break even. But it's down like
Silver's gonna come back.
it's going to come back. And the question is when.
Yeah.
I think I'm down like 15 or 20% on it.
Right. Well, that's a solid one though. It'll be back. I bet you.
Gold
won't
is
be back.
great too.
Yeah.
Dude, I'm up on gold like crazy.
Yeah.
Yeah. The gold is also don't touch. If you sell it, because it's really volatile.
Right.
So I remember the first half of the year, I was up like 20% or something on gold, something ridiculous.
So, what are the instruments that you use to invest in silver and gold?
I can pull it up. So and I'll send a screenshot later so you can show it later. So in Robinhood, love it. And I'll actually delve into what my investings are. You can there's a ETF called SLV for silver.
Okay.
And gold is GLD, and basically
Okay.
it just tracks, for the GLD gold, it's basically it tracks like the London exchange, I think, on gold or something like that.
Gotcha.
Here it says here, gold tracks the gold spot price, less expense and liability, using gold bars held in London vaults. So basic gold price. And I use that to buy gold. So if you want to physically own gold, it's fine, but it's a pain in the butt to sell. Like, you're not going to be able to sell it. And I mean, if you want to, like, just for fun, like, I would love just to have like a thing of gold. My boss bought us for, I think last year he bought us for Christmas or something. He bought us silver, like a small, like an ounce of silver. It's really nice to have. Like, is it worth anything? No. Like,
Well,
it's worth something,
right?
but like, I'm not going to sell it. It's nice to have. It's nice to have. It's,
right.
it's really fun.
That's
so
cool.
that's how I had this. I looked it up and I was like, oh, this is someone recommended on YouTube that I saw. Some tax professional on YouTube that I watched that he talks about, and he's like, oh yeah, I bought this. So I was like, I looked into it and I was like, why not? Why not?
that's
No harm,
cool.
no foul.
Right. Yeah. No. That's
Gold
a fun
always
one.
goes up. Don't listen. Dave Ramsey, for example, hates gold. He's like, it's not good. It's not a good investment. It always goes up. Okay, it beats inflation. It always goes up. Would I put all my money in gold? Absolutely not.
So what's his reasoning for?
I think it's because he's very he's been saying the same stuff for like 30 years. So I think his is just like, it's a commodity. He likes, the broad-based stocks, market index funds. He likes that. And I think it's more of like, he feels like it's gambling. And, he's very he doesn't like, the people he's talking to are people that probably aren't very financially savvy. Right. So that's what I feel like. He's just trying to herd them into something. He's trying to something that, is very stable, very safe. Because once a lot of people get into gold and that's like all they do. They buy and sell and track it. And it's a pain in the butt. Like if you're going to do it, fine. But I think it's just a pain.
Yeah.
It's to sell commodities and all that stuff.
Right.
But a little bit. I think my very small, I put when I was investing more regularly, I was putting let's say I was putting $200 a week or $100 a week, I was putting 10% of it into gold just to have it. Right. Just to, as a hedge type thing. Sure. But, I'm up I think 10% I think this year.
Right.
Let's see.
That's cool.
Let's see how much I'm up on my gold. I haven't invested in gold in a while because because I'm saving for a house, I want a little bit more stability. So I've been putting a VTI. So this year, it says I'm up about almost 9%. I'm up $190 for the year. So nice. So that's fantastic for me.
Yeah. Heck yeah. That's a win. That's a win.
Yep.
All right. What's the biggest lesson the market has taught you?
Ooh. That always keep investing. I think if it goes down, it's going to go back up better.
Yeah, that's a real tough one for people early on as well too. Yeah. It's just when they take that first hit, man, they're like, and I have a few friends who just, they'd gone to investing for a month. Yeah. And then something happened and they're like, this is down, I'm getting out. And you're just like, well, you did the exact thing. You just paid everybody who's not getting out.
Exactly.
So why would just hang out, man? Yeah. You did the thing. You've seen the charts, even if they go up and down. This is not a secret. This is not a secret. It's not. And I did not show you anything that said that it was going to do this.
Yeah, no. And it goes like this.
And show me a chart that looks like that. Yeah.
If someone shows you a chart like that, they're scamming you.
They're making things up. Yeah.
But also it goes a little bit up, a little down, a little bit up. But it always goes up. And obviously, people are always worried. Oh, what if I lose all my money? Which again, it's impossible because if you lost all your money, that means the U.S. economy crashed. And it's at zero, and I think you have much bigger problems than your S&P 500 that you bought in Robinhood 2 years ago. I think you have much bigger problems than that.
Right, things are going to get apocalyptic.
Yes,
and it's not
so
really...
always investing. Because think about it. Let's say the market gets cut in half. Let's say you lose 50% of your money. So let's say you had $100,000 and you got to. That's even smaller numbers because most people don't have $100,000. Let's say you have $20,000. Yeah. You get down to $10,000. It's going to come back, that 50%. And not only that, you're buying everything at a sale. So keep buying. Because think about it, everything is now 50% off. So even if it goes up 10%, you made some money. Another 10%, it compounds on that, another 10%. It's going to come back within, I think 2008 came back in a few years after that. Right. And now I think it was at 6,000 in 2008 when it crashed, and now we're at 50,000. So you made 9 times your money. So if you had $1,000 then, you have $9,000 now. Right. Okay, inflation, whatever. Okay, $7,000 in actual value. Fine. Give me $7,000. If you don't want your $7,000, I'll take it. I don't care. Right. So I think that's what's important.
Yeah, absolutely.
It's okay. My wife is very nervous about investing, for example. She likes cash. So I'm very cash heavy. Very. Yeah. If someone who is a experienced investor saw my thing, I'm very cash heavy, and they'd be like, "Why are you wasting all your?"
See, that's what people are going, but inflation.
Yeah,
but inflation.
Yeah. So, but I get it. I'm taking a hit on inflation, but my wife likes to have the cash. I have a very large emergency fund. I like to pre-plan. So I have money saved for a car because we only have one car now, and I have money saved for a vacation. I have money saved for emergency fund, and I have money now saved for a house and stuff like that. So I enjoy having cash, and I have a lot of it in my checking. I have probably a month or two of expenses in my checking account right now too, because I do like the secure. I also like the security, but it's more for her as opposed to me. Gotcha. For me, I would be I would have put everything away.
Right. That's funny. Oh shoot! What's one thing you believed about trading early on that you no longer believe today?
I thought you could. So when I was in high school, the penny stock thing was a huge thing. So I really believed that you could get rich.
Right.
There's a guy called Timothy Sykes who's, if you're maybe a millennial, you might, and are into finance, always been into finance, you might be familiar with his YouTube stuff. So he was huge on the penny stocks. Like that was his thing.
Right.
He's very wealthy now because he sold courses, but he didn't actually make money.
Right.
So I think in the beginning, I was like, oh wow, these people actually make money. And then as I got older, I realized they don't actually make money. They make money off the courses they're selling to make you money. So I think that's one of the things. And I also thought, only smart people do it. My parents didn't really talk to me about money when I was old, when I was younger. So like, I didn't really know much, but also a lot of stuff I learned myself, but everything's online.
Right.
So I think if I were to sum it up, one thing I didn't know is that people actually don't get rich from day trading.
Right.
I didn't know that. I thought people like because you always see them on like the Wall Street and all the movies, and they were making a ton of money, like the Wolf of Wall Street and on YouTube and stuff, but they don't apparently.
Yeah. Well, the majority of them don't.
Yeah, I think it's like 90% of them don't make money.
It's a very high percentage.
Yeah.
That's not the way to do it.
No.
It's you could definitely have some fun doing that. It's a game.
I think if you want to trade and you want to do day trading, or if you want to do single stocks, fine. But make sure it's not, I think some people say 10%, however much you feel comfortable losing. If you can take a set of money and burn it and you'd be fine, go for it. Like even if that's for you, $1,000, you can burn $1,000. Like my brother now, he used to work at a startup company and he left and they offered him options to buy.
Right.
So I asked him, if you could take the money that you have now and burn it and you wouldn't care, would you do it? And he says, not all of it. So I was like, okay, invest how much you think, buy shares of how much you think that if you put, so I think he did half of the money that he wanted to, that you could burn and you'd be fine. Because you're essentially burning money. Like
it could go. It could
go other way. Obviously, again, you're going to be like, but Nvidia did so well. I'm like, yeah, but you didn't buy Nvidia 10 years ago. And even if you did buy Nvidia 10 years ago, you would have sold as soon as it got from $1 to $2. You would have sold. You wouldn't have held it until now, where it's like $600. Like you wouldn't have, most likely.
Right.
So
yeah, it's dangerous, and it should be treated as such.
Yeah, it's definitely a game. Like all those people that do covered calls and all that. I don't understand any of that.
Right.
If you're telling me I got to take out a loan essentially to buy stocks, thanks, no thanks. Because like you're gonna owe that money either way. Either you're gonna pay taxes on it, or either you're gonna lose and you're gonna pay taxes. Well, you won't pay taxes, but you're gonna lose and you're gonna have to cover your loss on that somehow.
There's a lot to all that. It enables a ton of strategy, all the different options, possibilities that they have out there, and it's easy to get carried away.
Yeah.
You can also be safe too, and you can use it in the way that they were initially intentioned, right, to hedge.
Again, I think if you can burn the money, if you can set fire to the amount of money you want to spend and not feel it, go for it. I think you can do whatever you want.
Right. Oh, that's too funny. Okay. If you could go back and talk to yourself on day one, and I probably know what this is going to be already. What's the first thing you'd say? Just
buy.
Freaking do it.
Fucking do it. Just do it.
Yeah.
Just do
Take
it.
that advice. It's the second person on, right?
Yeah.
Second person to me. All three of us have said this. So just, if you're not doing it, just go out and do it today.
They say the best time to plant a tree was 20 years ago. The next time to plant a tree is now.
That, there's...
You can't think, oh, I'm too old. I didn't do it. I don't understand. First of all, the excuse of I don't understand it, I don't think it's valid. I can understand someone maybe your age or my parents' age who are, my parents are in their 60s, or someone who's in their 70s who's like, listen, I didn't understand. Because, 30, 40 years ago, there wasn't the internet. There wasn't ChatGPT. There wasn't Gemini. Now, today, dude, my entire investing strategy is like Gemini. Like, honestly, I told them the funds that my 401k had. Before, obviously this, but now it's much easier to research. You take a screenshot. If you have a 401k at work, you take the employee handbook, take a screenshot of what they have, you upload it to ChatGPT and say, which option is best? And it'll tell you. There's a ton of YouTube content. To my opinion, if you want a more professional, the Money Guy show is the most professional because they're actual certified financial planners and financial advisors, and they have a ton of good content. So obviously, they don't get the views as somebody else might, like Caleb Hammer, who's not a certified financial planner, but he's a little bit more conservative on money, depending on who you ask. Dave Ramsey is a great resource. I think Dave Ramsey is a good resource for people who are starting. I think someone who is 22 years old, Dave Ramsey, 100%. 100%. Because it gives you the foundation. Because I don't believe in debt. There are people that have zero problem with, there is the whole arbitrage of, oh, if I buy stuff at 0% on a credit card, technically I can take that money, invest in the market, blah, blah, blah. If you want to deal with that, fine. I think it's just a pain in the butt. Unless I think that's more of like if you're a little bit more mature on your financial journey, then go for it. Like technically I could do that. I have no problem. I don't even use my own credit card ever because I just don't care. It's not something that I'm interested in. But I think Dave Ramsey is a great place to start. I think once you pay off all your debt, I would switch over to the Money Guys because I think they have really good advice in regards to investing. And then I think you should sprinkle in sort of more of the psychological. So there's a guy named Ramit Sethi who has, he talks to couples more about finances. And I think he's more on like the psychological aspect of money, which is very interesting, of why people are spending. And he talks to people that, most of the people he talks to are on the higher income earners. They're $150,000+ a year. So that's more of a high income. But these people have nothing. I'm talking about, they have in a bank account $2,000. And you're making $150,000 a year and you have $2,000 in your bank account and have $20,000 in investing. You ain't doing good. You're screwing something up because you should be having more. So he's more of the psychology. So I think he's a good side listen to. But that's how my philosophy I think is. My philosophy started with Dave Ramsey. And I was very hardcore Dave Ramsey, but then I realized there are some things that I think it's fine to use a credit card if you can. There are people that just can't. And, if you are going to use your credit card and pay it off every month, I think it's fine. But if you're going to use it and not pay it off and, you're going to...
It says it's perks, right? The miles or whatever.
We have the cash back, and I think we have a ton of cash back. And my wife, we only use my wife's card to build her credit because I am like an authorized user under my dad, but I don't use credit at all. And we have enough money, so if I wanted to rent an apartment, no one's gonna come at me because they're gonna be like, here, I have no debt, and here's my bank account. Like I have the money to pay for 10 years worth of rent. Like it's fine. So, yes.
Well, what's something going on in the markets right now that you find interesting / annoying / worthy of telling the baby bulls about?
The war in Iran, because 2 weeks ago, he said he was going to bomb Iran. And then the day after, he said he's not going to bomb Iran. But it was good for me because I'm investing always. So all of a sudden, it just went straight. It's like I gained like 2% in one day because of that. I was like, oh, that's great. So I think that's what's annoying because we don't know. Because every single time he says he's going to bomb them, the stock goes down. And he says he's not going to bomb them, and then it goes up again.
It's a game at this point.
Yeah.
It's really, he loves to manipulate the markets.
Yeah, because,
Yeah.
I'm not. Can we get political?
Yeah, I don't mind.
So I voted Trump
Right.
twice. Don't have a problem. I liked him the first time, second time. This whole war thing, I don't agree with. I'm not one of those Trump does everything perfect. Definitely not. I think the war in Iran is pointless and stupid. like if we're talking as me living now in the U.S., I'm like, the markets are all over the place, and someone's definitely getting a kickback on that for sure. Insider trading, 100%. 100% from both sides. I don't whether you're Republican or Democrat, left, right, Green Party or whatever. Insider trading, 1,000%.
It's not even really hidden anymore.
No,
it's
of course not.
I use Moo as one of the accounts that I have, and they have a whole section in there of just
Nancy Pelosi,
smart money. Yeah, her picture's right up there. Trump's
Nancy Pelosi,
just one after another.
the greatest investor of all time.
You're like, they're not even hiding anymore. So it's all.
People are like, oh, she left office, so it's not going to be. It's like, you don't think she gets a little text message from AOC or from I don't even know who else, and being like, oh, this is what's happening? Like, come on, of course she is.
Yeah, it's hard to it's all hard to digest at this point. When you think about Jimmy Carter was forced to sell his peanut farm. His family, his peanut farm was in his family forever, and he was forced to sell it.
Yeah.
And he did, and it's just like that's not even radar worthy in these days.
No, of
it's
course
really
not.
just like,
of course. Nancy Pelosi is up 400% a year, so that doesn't strike anybody oh, okay.
I try not to think about it too hard.
No, I definitely, I really don't think about politics at all. I just if I see a headline of only on the Iran war, I thought it was just funny because I thought about it one day and I was like, because I think the same day I actually had a trade going in for to buy VTI or whatever. So I was like, I wonder if I actually made more because like I just was in there already, and I checked and I was like, oh, fantastic, didn't bomb Iran, great, the markets did fantastic. So I was like, I'll take it. But this is what's pissing me off, is this whole like, it's like, is he going to do something? Is he not going to do something? Like, if he doesn't do something, should I be buying more? And now I'm like, I realize like I'm not going to deal with it. Like, I'll just keep investing the amount I want to, whether it's high, low, doesn't matter. Like, in the long run, I'll make money.
The market is slowly catching up with that.
Yeah.
It means less and less every week that the same thing happens again. And every week it's a little bit less of a fluctuation.
Yeah.
So, I mean, it's a matter of time before it's, I think, before it's just all talk.
Yeah.
I don't know what happens at that point, but
Who knows?
We'll see soon enough. All right, it's time for the good part. This is Bull Busters, because it busts your bulls a little bit.
I saw the
in
questions
three
and I was like, oh, I didn't study. So there's a chance I don't know anything.
What? You don't know these questions. I don't know what you're talking about.
I'm assuming I don't know anything.
All right.
You can edit it.
Part
out.
one, the beginner quiz. No, it's fun. It's funny. It's all real loose. Right.
He sent me the questions, and I looked at the questions, and I was at work, and I was like, I don't need another job interview. I don't know these answers, so I'm going to make a fool of myself, okay?
The secret is that these questions aren't really real. They're to make you learn.
Yes.
And to make us remember more.
Yep.
That's the whole goal of this.
And maybe I'll learn something.
It's not an actual, you will win something at the end. It doesn't matter. It doesn't matter how you answer. All right, you ready?
Yep.
Clock's on. What does VWAP stand for, and why might a trader care about it?
I have no idea what that stands. I think I did a little Google thing, and Gemini came up, and it was like something average.
Yeah, it's the volume weighted average price.
Okay.
Which is, it's the closest thing we have to a scoreboard going out throughout the day, right?
Yeah.
More volume, it gets weighted more heavily.
Okay.
The price is moving all day, and so all day, if you watch VWAP, if you bought underneath VWAP, you're winning.
Yeah.
Because you beat the average.
Yes.
And if you buy above VWAP, you're not doing something.
Oh, yeah.
You probably shouldn't have done
Okay.
that. That's really the simple.
Okay.
This is really it,
That's
right?
good to know.
So
Will I look at that? Will I look at that? Probably not. But
next
it's
time,
good to know.
Next time you go in there, turn on VWAP.
I will.
And I bet you
maybe-
will start looking at
I
it
will
now.
look.
Because you'll be like, when you're going to buy. It's just so much easier to go, well, I'm not buying it now. Why VWAP is there?
That's true.
I'll wait till tomorrow and see where VWAP is. And then you'll see it's in a good slot. And you're like, boom, I know I got a better price
That's
than
true.
I did yesterday. So it's an easy one. And also, apparently, all the big brokers use it.
Oh, they're fancy.
They have to buy beneath VWAP.
Yeah, so they also have
It's
tens
mandatory.
of billions of dollars to.
Right?
For
So
them,
it's-
making a 10%, 10% wrong trade is a lot of money.
I'll take those extra 1 or 2%.
I will take a few extra zeros if they don't mind.
Yeah, it's the average traded price over the session, weighted by volume.
Okay.
Traders often use it as an intraday reference for where the bulk of trading has occurred and whether price is trading above or below that benchmark.
Okay.
It can also be used for entries, exits, trend context, and execution benchmarking. I totally said that from memory.
Yeah, of course.
VWAP is context, not a magic support resistance line.
Of course.
Let's have to add that disclaimer.
Yeah. Yes.
So but turn on your VWAP.
Yeah.
It's off on a lot of brokers by default, but it's real easy to turn it on.
I will look
in
into
almost
it.
everything. Yeah, VWAP's a good one. I suggest you do. There's only a few. I only use about 4, but that's one of them.
Okay.
That I pay attention to, and it's only recently that I've started.
Okay.
And I find it to be.
Do you think it's helped you?
I think it's helpful. Yeah.
Do you think that you look at your portfolio more because of it?
I look at my portfolio too much as it is.
Yeah,
because I'm
I
kind of
get
like
it.
one of those people that likes to play all day,
Yeah.
and I'm constantly tinkering.
Do you always buy? Are you always buying? Like, let's say, do you buy every single day?
No, I don't buy every single day. Well, it's close. I do some kind of trade pretty much. Yeah, all right.
You're like, no, once a
do.
week. But actually, the past like 3 years. So use that to trade or not at all? Or
I use it a little, yeah.
do you buy? What do you buy? Like, what are you buying now?
If it's my daily thing, I like to play option games with SPY.
Okay.
So that's
So that's why when I said don't do options, you got all like, oh,
I
of
like
course
options.
options.
Yeah,
I know.
I do like
Again, but if
options.
you can swing it and you can burn the money and you
Right.
don't care, like it's not that you don't care, but you can take however much money you're putting and just set it on fire and it doesn't affect your life.
It's not something you should run into the same way that you would run into buying a share of Apple.
Of course.
Like you go buy a share of Apple, you're like, okay, get wild. Go ahead, buy yourself some Apple. And
buy
get-
$2,000 worth of Apple. It's fine.
but
Apple ain't going anywhere.
Do not run into options like that until
Oh,
you've
yeah.
the true disclaimer is fully understand options before you get involved. People love to say, "Oh, the big money's in options." The big money's in options, and also the big losses are in options too. So unless you understand that when you buy an option contract, you're leveraging 100 shares of something.
Yeah.
That's literally what you're doing. You're cheaply investing in 100 shares of something, and it will move that quickly up and down.
Yeah.
So be sure about what you're doing before you even think about it. Just invest in things that are simple. You know, for the crowd that we're addressing here, it's that's mainly what I would say is like learn investing first before you even think about playing around with options. Understand what's going on, and then at that point, if you feel like you want to, you know, paper trade.
Yeah.
Paper trade options for a good 6 months first before you go taking one real money option trade.
Yeah.
That's my honest recommendation.
Or go to YouTube and type in Wall Street Bets biggest losses. And there are plenty of videos on people going through Wall Street Bets and showing how people are losing $200,000 on,
No,
on
it's, and,
options.
you know, but the thing is, you know, they're small.
No, of
How
course,
big
you
is
can-
the prediction market right now?
Oh,
you know,
dude,
and the thing is,
Kalshi and Poly
you
market?
know, the prediction market is like you.
That's a big scam, though, too.
You're betting.
Yo,
You
that's
either
a big
won or you
scam.
lost. And the
Yeah.
thing is, like with options, like you can be smart. You can play a game that's like a real game that has multiple moving parts.
Well, no, there's a
and-
lot of math to it too,
Right,
and
right.
there's calculations, and
Yeah.
just doing a YOLO is not going to work. So I think if you have the time, and you are a seasoned investor, and you're doing all of your other investing, such as retirement investing in your Roth IRA or your 401k or whatever, and you're doing your other investing, again, I have no problem. You know, again, I'm more liberal on that. Like, if you want to blow your money, the rest of your money, if you're doing 50% of your money, you're living, you have an emergency fund, you have your 401k going, you're doing all that, and the other 50% you want to blow all on Kalshi, go for it. Like, go for it. It's your money. At the end of the day, it's your money. If you want to blow it on Kalshi, and you want to know if Donald Trump is going to bomb Argentina, and you want to bet on that, go for it. Like it's fine.
Right. 90% of all my finances are in the long-term stuff.
Exactly.
So it's, you know, don't get the idea that that's not what the case is.
Yes.
So this is why I am reluctant to even talk about. I have not mentioned any of that side of my trading.
That's
yet
fine,
up to
but
now.
it's good to talk about it because most people think that most people doing are boring investing, which is, you know, not as exciting and it's, you know, very long term. But I think people are doing that shift now that that's what they're wanting more as opposed to day trading. But on the other hand, you know, you see on the other hand of people only doing option trading on like Reddit or YouTube or whatever, and they're making tens of millions of dollars, and you're like, and that's what you see like, oh, I'm going to get into that too. But people have to understand there is a balance.
Right.
There is a balance. You know, you should be investing for the long term.
Absolutely.
You should be investing also maybe even for the short term because, you know, you don't want to work until all the retirement accounts open up.
Right.
But if you want, have fun with your money. It's your money. You worked hard. You worked for it. You're saving it. You're doing everything right. If you want to blow some money, again, on Kalshi, on Polymarket, on options trading, on buying Dogecoin, you're more than welcome. It's your money.
I think I own about $3 worth of Dogecoin.
I had Dogecoin, and someone told me to sell it to buy Shiba, and I sold it and bought Shiba, and that also did bad. But at Ripple, I loved Ripple, and I sold all my Ripple too because I bought it and it just never moved.
Right.
There was one point that I had crypto, and I bought $150 worth of like all different types of crypto, and it shot up to like 300 during COVID, and I was an idiot and didn't sell.
Yep.
Should have sold. Sold it recently for $180, all my crypto, and I was like, ugh, worst trade ever. That was awful too. I was pissed.
I keep it all as a reminder not to be dumb. when I
That's why you gotta always
especially
hold.
Robinhood. When I log into Robinhood, it's the first thing I see. I'm like, damn it, stupid crypto. It's worth about half what I paid for it, which thank God is almost nothing. So, you know, just be careful with that crypto out there. Just be careful with that.
But again, if you're doing everything else and you want to blow it all on crypto, go for it.
Yeah, if you put that 90% away.
Now I
and
think a
it's
lot of them
growing.
have crypto ETFs. There's a Bitcoin ETF. But
There's
again,
a number of them,
that
right?
shouldn't be a heavy part of your portfolio. If you want it to be 5% of your portfolio is Bitcoin, you're more than welcome.
Right. Well, they have like 2x, 3x crypto stuff too. It's like essentially options. For
Oh, wow. Oh, yeah.
lots of
Oh,
fun,
that's like
lots of fun.
gambling on
Yeah.
steroids.
Exactly what you do not want to do. All right. Second one. A stock falls 20% in one day. Does that automatically make it a bargain? Why or why not?
Ooh. Depending on the stock. So if it's like a big company and it falls 20%, yes, it's a bargain. I would buy. But if it's like a penny stock, Chegg is a great example. Chegg is an education company that lost 98% of its value.
98?
Yes, because of AI. Because it was like an educational platform, and because of AI, they lost pretty much everything. They're worth like I think they were at 80 and other like dollar something. So if they lose 20%, definitely not a bargain. Don't buy.
Right.
So it probably depends.
It depends is probably the right answer, right? The internet would answer this as and you know, I also say very much it's kind of an open-ended question.
Yeah.
Like it depends, but they would say no. Price falling does not tell you whether the stock is undervalued. The decline may reflect deteriorating fundamentals, changed expectations, dilution, bad guidance, regulatory trouble, or countless other things. A lower price is only a bargain relative to some defensible estimate of value or opportunity.
Yeah. So Microsoft making, you know, a bad bet on AI or something, it could lose 20%.
Right.
But, you know, most likely it'll recover that. Most likely.
Right.
So I think, I mean,
Yeah.
I guess based on that explanation, I guess it's not really a bargain, but I think you would buy.
Well, you know, and also I think it depends on what it's looking like when you're about to buy back in, right? If you're going to buy into it, what's it looking like at that moment?
Yeah.
Does it head upwards? And
Does it look like, if it's just a bad earnings call or something, you're probably okay.
Yeah.
Like, again, if it's a big company, Microsoft, Apple, whatever, Home Depot, Walmart, whatever, and they lost 20%, but it was just a bad, like, quarter or whatever, and it's like a bad quarter, or let's say Target or something, it's a bad quarter in the summertime, which I think they don't do very well during summer, you're probably okay, because November is around the corner, and they make all their money back in November, so.
And earnings, and bad earnings at this point. It's like, it's almost like.
But a lot of these companies are overvalued
doesn't mean
anyway.
anything,
The stock market, the most of the companies are overvalued anyway. And if you're talking about Nvidia, it's overvalued. Yes.
Have you ever read this?
Yes, I did, a long time ago.
So we've been through this before, but like he's all like PE more than 30. And
Yeah.
you think about it, you out of your mind, and you're like, you look at the stock market, you're like,
Everything's over 30.
Like, what are you
Everything's
investing in?
everything's 30.
There are things recommended constantly, like over 100.
Nvidia is a great buy, but like it's overvalued.
Yeah.
Like if you can, you know, again, if you bought Nvidia 10 years ago or 5 years ago, great, you made a lot of money. But now, I don't think I wouldn't buy exclusively Nvidia, because it's just like, where more up is it going to go? You know, at some point, AI is not going to be what everybody wants it to be. And I understand a lot of companies are adapting and putting AI into it, but like, you know, then what?
Right.
What's going to happen? It's going to get cheaper, probably, at some point. So NVIDIA is not, you know, to produce all the chips and the GPUs and stuff, it's going to be cheaper. So what, NVIDIA is going to lose its value because it's now cheaper to sell? And they're doing a weird, like, circus thing where, like, NVIDIA is selling itself chips to GPUs to buy the chips and all that stuff. Just like how, did you see that Tesla sold, or X sold XAI to SpaceX in its own thing? So, like, is SpaceX worth more?
That was an appropriate time for the bullet fall over.
Sorry, yes.
No, not to be sorry for it. It's just funny because it's pretty baloney.
Yeah.
Like, the bull even was like, this is bull.
Yeah, definitely.
Yeah, no,
Like,
there's
that
a
was
lot
a-
of that
he's-
kind of incestuous thing going on lately.
Like, so, you know, they're all in cahoots with each other. Like, they're in, you know, all these companies want to make money.
Right.
And they want to make, you know, their investors money, or, you know, the board money or whatever. So, you gotta take that.
It's a strange ecology these days.
Yes,
It's
for sure.
And that's, you know, one of the reasons I bring the book out is because it really pays, you know, as you become an intermediate investor, to start to learn about the history of what it is that you're dealing with.
Yeah.
Will give you a lot of insight that you didn't expect.
Yeah.
You know, learning about what's gone before, you're like, oh, really? That's so different now. And you're like, well, why is that? And all those things will open up keys into being able to look forward and kind of see what's coming when you see what's gone on and what we've evolved to. That's my whole point behind
History always repeats itself.
that. Yeah. Or let's do, you know, or at least rhymes, something to that effect. All right. You're up 30% in a trade, much faster than you expected. Sell, hold, or add.
Ooh. Well, because of SoFi, so I would have to say, I guess my intention was hold. So I guess I would hold.
Well, the
AI.
ever-intelligent internet would say there's no universal answer.
Yeah.
And we both agree with that, surely.
Yeah.
Ideally, the trade plan already defines the thesis, target, stop time, horizon, and rules for scaling. A sudden 30% gain is a reason to reassess risk and the original thesis, not automatically to sell, hold, or add.
Maybe
You know, it's touchy.
diversify, like sell a little bit, take out.
Yeah.
put a little bit somewhere else.
Yeah, reclaim some of your investment and do something else with it. And yeah, that's a good one. Teaching point, the best time to decide what you'll do after a big move is before adrenaline joins the committee.
Ooh,
Right?
that's a good. I like that one.
That's good stuff.
It's like gambling. Like when you win, you keep going,
Man, yeah, that's
What's good is I don't like gambling, so like if I lose, I'm fine.
yeah,
I don't-
I am the same way. And
I have
often,
zero emotion on gambling. I'm like, oh, I lost $20 or I gained whatever. That's fine.
Just to bring up the scary part of it again, when I am doing options trading, if I win,
You
it
probably
is-
feel so good.
it feels good, and it's very. I understand that tickle of like, let's go do more
Yeah.
now. But I'm also risk averse, so I'm always like,
You got to get up, do a
I'm
lap.
green. I'm
and
green.
then-
I'm green for today, and I like
Yeah.
that feeling. And I'm just gonna walk away, whether it's $40 or $400.
Yeah.
I'm just gonna be like, I'm good.
Yeah.
I won, and now I'm gonna enjoy the rest of my day and be happy with my
that's-
$40 up.
It's probably the best way to do it.
Yeah, because that second when you're in a rush,
Mm-hmm.
you want to go, you want to take that, you want to win more. I'm on a roll and doing this thing, and that is gambling. And
Yeah.
I do not like gambling either. I never have. When I was about I think it was just about 21, and went to Atlantic City and lost like $50 in like 20 minutes. And
Yeah,
was
and you're like,
I don't
this is
ever-
awful. What is this?
I
It's
don't
not fun.
ever want to effing do that again.
Yeah.
Why do people like this?
Yeah.
Like, this is dumb. You have to win to like it, and we all know that most people
You
don't
ain't
win.
winning. You
so
ain't
it's
winning.
like the house gets to win. They're the one that gets me happy
Yeah.
all the time. So yeah, no thank you. I'm good on that. What's more dangerous for a new trader? Not knowing enough or thinking they know more than they do?
Ooh. I think thinking that they know more than they do, because not knowing enough, you won't do it. But thinking you know more than you do, you'll do it and you'll make a terrible mistake.
Yeah, I wholeheartedly agree, and so does the internet to a degree. Both are dangerous, but overconfidence is often the more dangerous.
Yes.
It's a more dangerous combination because it can turn limited knowledge into oversized risk. A beginner who knows they are a beginner is more likely to size small, ask questions, paper trade, and keep learning. Paper trade is going up on that magical sign behind us
Yeah.
at some point because, like, paper trading, you learn so
I remember
much
that
from
was a whole thing too. Like TD Trade had like a whole like you can like trade, because when I first got into finance in like high school or whatever, I was like you could do day trading but with fake money. It was actually a lot of fun. It's a lot of
Yeah.
fun. So
I still do it.
Really?
I do it all the time. Yeah, when people have like, this trade tip, do this, try this right now, and I'm like, that's the first thing I'll do is go run and throw it into Moo on the paper trading thing and
that's
just
fun.
see how it comes out. And I saw a tip one day from someone. It was like, buy 5 with these option contracts and hedge it with this. It was a really complex play, and I'm like, I barely understood what was going on there. So I threw that into Moo real quick, and then I was like,
how'd it do?
and I went over to Claude. I was like, Claude, what's up with this trade? Like, what's going on here? And he's like, that hedge is stupid. It doesn't even make sense. Like, and I'm like, well, what would you do if you were going to do this? And he was like, well, I would lower that contract and let's change it to 3 contracts, and you don't really need that hedge at all because that's what you're really doing is managing your sizing here. So just cut that out. And let's go, instead of doing the $20 strike price, do the 12 strike price. And that all makes this whole play make sense. And there's a lot to it. Right?
Yeah.
Tons and tons of mathematics. But so I was like, all right, cool. I threw them both in a Moo. And dang it, Claude was right as rain.
Because
Right as
the
rain.
people that do it don't actually know, and there's a lot of math behind it. Like if you actually
Yeah.
want to be good, because again, billion-dollar firms do this, and they have people that
Right.
they have a degree from Harvard, math degree from Harvard, and this is what they do all day. Quants. That's what they do, and they get paid $700,000 a year
Right.
to do that, plus bonus.
Yeah, I think with Claude's, so the trade that was recommended was winning.
Yeah.
The Claude trade, I think, did about 40% better than
Yeah.
the trade that was recommended.
That's wow.
So it was, and that's anytime it's stuff like that where I'm just interested and want to see what happens. It's just the easiest.
It's a good. I
thing for me
never
to
thought
do.
about that.
Yeah, do if you start doing it, you will do it all the time because it's just too much fun because you don't care.
Yeah.
You're like, oh, this is cool. Let me go see what happens.
But
And you're like,
$6 million on Apple puts. Their earnings call is tomorrow.
right. They usually give you $1 million to work with.
Oh,
A
great!
million seems to be
$1 million
the spot,
on
yeah.
Tesla.
Do you have an account with Interactive Brokers? IBKR?
No.
Is one of the big ones. They're used for like quant trading, like computerized.
Maybe I'll tell my friend about this because he
They're a
loves
good
that
one.
stuff.
IBKR is probably the best one for that type of trading.
He loves
If you
math.
can
I have a
get-
friend that loves math, so
Yeah.
I feel like he would love
They
that.
have a great paper trading system.
Okay.
Thinkorswim has a really good.
I think I've heard that one.
But they're Charles Schwab owns them now.
Okay.
Owns that. That's like Thinkorswim is like their interface. They have a great paper trading interface, but their interface is so. I mean, people flip out at this, but it's garbage. I was a software developer for years and years and years, so I get to talk all the shit I want to about this. Thinkorswim just decided, like all that stuff that we did, like the way people know how computers work and the way interfaces work, that we can sit down in an application for the first time and actually do stuff with it. They were like, yeah, fuck that. We don't really give a shit about any of that. We're just going to make it all up again. And it is treacherous.
That's how Vanguard is.
It's cool looking, but it is horrible. And I've tried, I can get around it a little bit, but I just don't want to, because there are things that exist now like Moo and Weeble. Yeah. Weeble's another one.
Weeble I heard. I never heard if it's good or bad.
Weeble's good as well.
It's been around a while, I think, Weeble, no?
It's what?
It's been around for a while, like the app.
Yeah. It's been a bit now. I mean, I think it's over 10 years old.
Moo I only heard from Cable Hammer, and I think they're owned. Are they owned by like a Chinese company?
They're owned by a Chinese company.
I think that's why a lot of people.
They have an American, they have an American company over there now. That I think theirs is the best.
I heard they're really good. I heard they have like a really nice interface, and
fantastic.
And they have like a lot of options, and like you can do a lot of stuff.
Yeah, it's great.
So I heard Moo was actually really, really good.
I like it a lot. I
just liked Robinhood because everybody's like Robinhood.
Robinhood's good, but it's a little basic. Like once you start getting deeper into it, and I still use Robinhood for some stuff.
Because I know in Moo you can. There's like charts, and I think Robinhood just now added like charts and stuff.
Yeah, all kinds of craziness in Moo and Weeble as well. I think.
But now Robinhood's getting into the whole poly market and all that stuff too.
They all are.
Yeah,
they're all doing that shit now.
It's easy money.
It's just it disappoints me a little bit. I really don't want.
Well, there's a huge problem now of like men between ages of like 25 and 35 that are just gambling like their life away.
Right.
Like a huge.
My daughter has a friend who just lost $2,000 and was like, hey,
"Isn't your daughter like 18?
My parents. Yeah, her friend is 18 too, or he's only 17 still." Well, yeah, I lost $2,000. I was like, hey,
it's
Dad.
crazy. Dude, my kid lost $2,000. They would never see. First of all,
no,
you're going to pay me that back. If I gave you $2,000 to do something else and you gambled it away.
That's just insane.
That's insane.
It's insane. It's just, and I just don't understand.
I don't get it.
Like, why are...
Because it's people that don't even, like, let's say the DraftKings and sports and stuff. People don't even watch sports and they're gambling. Like, at one time I remember this because it made me laugh. When my wife was pregnant, we went to the OBGYN for ultrasound. And some guy and his girlfriend, wife, whatever, were sitting next to us. And he was, like, talking to her about this trade that he's going to make on, like, DraftKings or something. He's like, I don't know. There's a game tonight. I want to bet on it. And I was like, bro... Like, you're about to have a kid. Like, put that in savings account. You're about to have a kid. It costs like 40 grand. Like, I have a medical, the insurance paid for everything, but I still have to pay like $500 for other stuff. And I'm like, put that in a savings account. What are you doing? You're gonna bet it on, I don't even know what game there was that day. I was just like, I heard that. I was like, are you kidding me?
I don't
get it.
All
I
that
get
now.
it. I have a friend. So my friend, again, I have a friend, smartest person I've ever met in my life. Like genius. So he's our data scientist to win on my team, and he created like a program that basically like scans Kalshi and there's like weird. Sometimes they upload like wrong because they do a lot. So they upload like. I don't even know how to explain to me. I didn't understand it. They upload, so if there's like a game, they'll do two options, and sometimes the options that they have, if you bet on both of them, you'll win both ways. Right. You'll win both, but you'll win like extra because you bet twice, and they do it by accident because there's just a lot of trades going on. So he built a program that can identify those, and it'll send him a message to make a trade. So he's he's making like $40 an hour or something ridiculous. Like on this, like he's like, oh yeah, I do like 2 trades and I make like $200, and I'm like, this is crazy, because he like finds like the arbitrage between two different things. Like if this team is gonna win this league, but it's impossible for them to win that league, for example, they make like mistakes like that. So that's against that. They're gonna win.
Is he? And you might not know this. Is he tapping some kind of API, or is he scraping?
I think he's. I think on Kalshi they have an API that you can use. Right. I know Polymarket, he's requested an API, so I don't think they have it yet. I don't think he has
trip.
it. It's
That's
crazy.
wild.
Yeah, it's crazy. He's wicked smart. Like, he did a bunch of math on it and stuff. And like, he explained to me, I was like, I have no idea what you're talking about, but I act like I know what he's talking about.
Right.
I don't know what he's talking about. He does some weird arbitrage, and he can find the bets that aren't
Yeah, no, I get
actually
it.
that shouldn't be happening.
Well, there's a similar thing that
He says it's only a few seconds because they catch on and they take them off. So I was like, dude, sell it to them. They'll buy it.
They do
Like,
the same thing with options.
Yeah.
You can find option trades that you're like, well, this is kind of in my favor.
yeah,
And they
that's what he does.
scan for stuff like that, and people buy those.
So there's a
options.
thing that like runs that he
Yeah.
like sits and he'll like be at home and run it.
That's a trip, man.
It's crazy. It's insane.
We live in
I
crazy world.
told him just sell the product, like sell to them. Like he said, like that's what he like probably wants to try to do is like try to reach out to somebody to see if like they'll buy it for him, like the code at least.
Right. So they can see it and knock
Yeah.
the holes out.
Yeah. Yeah.
Right? For a couple $1,000,
Yeah.
they might save themselves $500,000 or something. All right, next, you have $1,000
Mm-hmm.
to start trading.
No, I think you know what I'm gonna say.
What's the first thing you should be trying to accomplish? Make money, avoid losing money, or learn?
Is this the only $1,000 I have? Make money.
That you can afford to invest. Let's go
that I
with
can
that.
afford to invest.
Yeah.
What was the options?
You can either make money, avoid losing money, or learn.
Probably avoid losing money.
I think that's a good answer. I think, they're all decent answers.
Yeah.
But making money is just a little straightforward. Like, okay, well, you don't really have a thesis yet, so what are you going to do to make money?
Yeah,
Like,
what's
it seems
making
you
like
have
what's
to-
make money is like make money gambling on something.
Right.
Like make money in 10 years from now.
Right,
Make
do you
money.
look at that list of like all the things that like went way up today?
Yeah.
Just like go that
Yeah.
one, and where are you going with this, right? So I mean, it doesn't matter how much money you're starting.
And learning, I
with.
feel like $1,000. It's $1,000 is a lot of money, but it's also not a lot of money, and it's a lot of money for a lot of people. So like, I don't know if I would use that to learn.
Oh yeah, you're saying like spend it on things that would.
Yeah,
that-
like
yeah.
either like, I don't think I would spend it like if we're talking about learning as in trying to buy stocks, or if we're talking about like actual education, like
Mm-hmm.
going online and buying a book. I don't think you need to purchase anything. I don't think you need to buy anything because everything's for free on the internet.
There's so
and
much
again,
info.
you have AI
Yeah.
to explain. So you don't need to spend any money to learn how to pick a ETF or whatever, or a
Right.
mutual fund. For the long term, but I probably would just be like, don't lose money.
Yeah, that's right. Well, I mean, those two could definitely go together, right? I mean, if it was me, I'd be like, go spend at least 2 to 3 hours reading about stuff,
Yeah.
about what are good moves to make with $1,000
Yeah.
right off the bat, and do that due diligence, and then go ahead and place it somewhere and watch it and see what happens. And I think you've kind of encompassed everything that you need to there.
But don't ever invest in anything somebody else tells you, unless you understand what it is. I think
Absolutely.
that's like, I can tell you buy the S&P 500, okay? But maybe, if I were you, you can do that on your own, but I would go look, what does that mean? It means it's the 500 largest stocks or companies in the US currently.
Right.
Okay, so it always changes, first of all. So, what they were 10 years ago is different than what they are today.
Right.
And so you have to look at what the companies are and what they are. So, that's something you have to understand is how much it has gone up. Does it ever go down? When the crashes were? How long did it take to recover? You have to understand that this is a roller coaster that you're going to be riding for the rest of your life.
Right.
And not something that you're going to be doing for 2 years or 1 year. Because most likely, honestly, huge chance that if you invest $1,000 today in the S&P 500, tomorrow you could lose half of it. You never know what's going to happen.
Yeah.
It could happen.
Right.
But
No,
but the most important is you don't pull the money out, first of all. And you keep doing it, keep doing it, keep doing it. And at some point, it's going to come back. It's probably better than it was before. And you're going to make money in the long term.
Right.
Always. Always.
thing is, it's the least risk on the stock market,
Yes.
where you can make more money than you can from a high yield savings account,
Yeah.
or like a CD, or any of those more, or bonds. The ways where you're definitely not going to lose money, right?
Yeah.
So if you want to make more money than those things,
But
then
you
this-
risk losing money.
but you don't want to go crazy on the betting, right?
Yes.
You don't want to gamble too hard. This is where someone tells you buy S&P 500, your first inclination should be, what the
is
heck
that?
is S&P
Yes.
500? And that should lead you, if everything's going right, it should lead you down the ETF rabbit hole.
Yeah.
And finding out what ETFs are and what are the differences between them.
Yes.
Some they're managed differently. the price you pay for their management is all different. And these are all things that you probably want to learn a little bit. Now, is that advice good? This is not financial advice, but that's good financial advice.
Yeah.
S&P 500 is a safe way to go.
Yeah.
VOO is a safe way to go. VTI is a safe way to go. But at the same time, learn what these things are for yourself so that if things go wrong, you can only blame yourself. So you know exactly what you were getting into. Chances of things going wrong are very, very lean, right? You're going this route. But at the same time, know what you're doing. Know what you're putting your money into. If you absolutely cannot lose any money, there's nothing wrong with a high yield savings account, right?
Yeah.
There's nothing wrong with bonds. I mean, America might be a little scary right now. Buying bonds,
true.
But that's another thing to research. But just make sure you know what you're doing. The more that money means to you, the more value it has to you, then the more you want to know what you're doing with it.
And if this money has a lot of value, you have to take a look. Like, this kind of a tangent, but you have to take a look at your whole financial picture. Because it's not only about the investing. It's not only about the future. You have to also think about, okay, today you have a car. You have a $300 car payment. Well, $300 is a lot of money that if you put away for, 30 years, it's going to be a lot of money. Mm-hmm. You have to look about, okay, I owe money to this person. I owe money to this person. I don't have an emergency fund. So if something happens, I have a dog and it needs to go to the ER. I took my dog to the ER. It was $1,000. But for me, it didn't sweat it. Why? Because I had an emergency fund. I had $15,000 in the bank account that I was like, oh, $1,000, fine. I got into a car accident. My wife got into a car accident. And I didn't put renter's car insurance on the thing. So I had to pay out of pocket for a renter car. But for me, $800, it's a lot of money. Yes, I'm not going to say that. But for me, it was like no skin. It was like, fine, I have $800. I can pay it. Not a big deal.
Right.
That's the most important. Because that's when you start getting to the point where people might have a big fat 401k. They might have $30,000 in a 401k, but they don't have any cash. Mm-hmm. So what happens if something happens? They have to go to the 401k.
Right.
Something happens, they need to now pull out 10 grand, and 10 grand over 30 years,
that's a lot of money.
Let's say it doubles every 7 years. The rule of 72. If you want to know how much money you're going to make, the rule of 72 is basically you take whatever interest rate you think you're going to get, divide that by 72, and that's how long it will take for your money to double. Is it accurate? No, but it's an easy way to mental math how long it's going to take for your money to double and how to get. So $10,000 over 30 years is what, probably 50 grand. It's a lot of money.
Right.
So, that $10,000 expense or car that you just bought, or the $20,000 car that you just bought, is costing you millions of dollars at the end of the day. So not only is this, not investing advice, not financial advice or whatever that we legally have to say, but investing is not the only thing. Like you have to make sure that your whole financial health, because you can be investing all your paycheck, you're investing 30%, but you don't have any cash, you're screwed. You're screwed.
Right.
Now I know that inflation, whatever, we can talk about that as well, but you have to have a little cash.
Well, it's just good to understand, right?
Yeah.
You need to know what's going on, and every individual is different. Everybody's situation is different, and that's the important part to take away here, right? It's for me to put 10 grand in something is different from him to put 10 grand in something, and it is different for you to put 10 grand in something. And for some of us, it'd be like, oh, I lost that 10 grand, who cares? And other folks would be like, oh, I'm totally screwed now. I have nothing put away at all. Mm-hmm. So just, do your research on your own and make sure you understand what you're doing with your money, but also realize that, this is the road to freedom. Yeah. So take it seriously.
Yes.
All right. Well, let's the internet answer was to this question of do we make money, avoid losing money, or learn? Learn while protecting the capital that keeps you allows you to keep learning. Making money is eventually the objective, but early success can be dangerously misleading if it came from luck or excessive risk. Ooh. Survival buys repetitions. What would successful first-year progress look like if P&L were not the scoreboard?
For a company? Or
for your beginner trade or your beginner investing, make money, lose money
if I was successful in the first year,
other than P&L, with you've got your $1,000, you did whatever you did with it. What would first year success look like if P&L wasn't the scoreboard?
Like if
profit and loss is not the scoreboard.
Oh, I don't know.
I would say that it's just that you understand everything. That
Yeah,
we
I guess
were
if you
talking
learn something,
Yeah.
if you learned and you figure out, okay, I know what the difference between an ETF and a mutual fund is. I know what the difference between S&P 500 and QQQ is. I know the difference between a single stock and a group of stocks. Like, I understand. I think that would be probably very good. And all this stuff you can learn in like a weekend. Honestly,
it's not
like it's not
as
rocket
bad.
science.
Yeah.
Basic investing, not all the option tradings like he's doing, or doing puts and calls and short selling and all that stuff. That's complicated.
Don't even think about any of that until you're like on year 2, and it's
unless you have don't think about it unless you're having a steady automatic process that you're investing in, and you know that you're set for retirement or whatever. Then you can start thinking about that stuff, and that's would take you a little bit longer to learn. But yeah, I think the first year is just you understand the basics.
Yeah, and like you said, it's not hard.
Yeah.
So just get that done, and shoot, just hanging out here, you can learn a whole bunch about it.
Oh
right?
yeah.
Did today. Anybody who hung out this far?
Yeah.
got a nice wash in it. All right. Part 2 of the Bull Busters. This one's quick. Ready? Rapid fire.
Okay.
Favorite indicator?
I don't know.
Well, that would probably just be market action, right?
Yeah.
Just price.
I like the line that goes green. I like when it's green. When it's green, I'm like, that's great. Fantastic. I go into Robinhood, I see green, I'm fine.
Not so much an indicator as a
I know.
color. I like green. The green things, as long as my
Yeah, I
things
know.
are green. And so
you, I'm not a-
then I guess I can guess your most hated indicator.
What?
Red.
Yes, of course. Down is bad. Up is good.
This one's easy. Calls or puts?
Calls.
Calls. Yeah. We like things going up better.
Yes.
We'll get into this in the future.
Yes.
Calls and puts. It's well, just really quickly, right? Calls are the options that you buy when you expect something to go up. And puts are what you buy when you expect things to go down.
Yes.
That's one of the cool things about options trading, is that you don't have to care what direction the market is going.
Yeah.
It's like if it's going down, it's just a different opportunity.
Yeah.
Right? So that's, but don't get just...
But I think
get
now
your
in this
feet wet.
market, you're always like, is everything going up? So you probably should just buy all calls, maybe. I don't know.
Technicals or fundamentals?
Fundamentals.
Fundamentals, huh? Yeah. I mean, they're hand in hand. So,
Yeah.
I mean, they're...
I think the technical, because I don't know the technical. I just know like the basics. Like, oh, this is fine. Like, I don't know.
Yeah, well, technicals is considered basically anything that's coming off the chart. Fundamentals is all the PE and how much everybody's making.
Yeah, well,
and
that
all.
I probably know more than like that. So I can be like, oh, PE is high, probably too high. But
Right.
that's what I know.
But this is
Yeah.
an argument as old as the stock
Yeah.
market. It's just, guys who are in the fundamentals want to
Yeah.
knock the technicals guy, and the technical guys want to knock the
Yeah.
fundamental guys. And, the technical guys want to tell you that the fundamentals are already wrapped up
Yeah.
in their numbers. And these guys, it's just it's that endless thing. When they're just, I don't even think they should be called two different things at this point. They're really, it's all one thing,
Yeah.
right? You're looking at the fundamentals currently when
Yeah.
you're looking at the technicals. But that's just my opinion. And, SPY or individual stocks.
SPY. SPY. S&P 500, man.
Yeah. And I feel like that should say like ETFs or individual stocks.
Yeah.
Right? 'Cause
Well,
that's-
SPY is, SPY, VO, it's
specific-
all the same
yeah,
thing.
yeah.
So, but S&P 500 all day, every day.
day trade or swing trade?
Neither. Neither.
I knew that was going to be your answer.
But day trade is cool. Honestly, if you're saying, I'm a day trader, that does sound really cool.
It used to sound cool to me. Now it just sounds a little frightening. Now it
That's
just makes
true.
me-
But I feel like, if you
me-
ever see those YouTube videos of people like, I day trade, they have like a helicopter
Yeah.
and like stuff. That's cool.
And the super van with
Yeah,
the
they
whole
have like the
setup in
screens with like
there.
14
Yeah.
different monitors. That's cool. Dude, when I was like 15 years old and I saw those videos, I was like, that's awesome. Dude, that's what I want to do.
Right.
That's what I want to do. I want to
Don't
day
you-
trade. I want to make $6,000 a day. What's the problem?
Don't you think it's cool in that same way that like being a rock star is cool?
Yeah.
That ultimately, it's like
It's
all goes
awful
down-
on the inside. Like you're dead on the inside, but like,
in the end, it most likely is just gonna toilet anyway.
Yep.
That's neither here nor there. Mostly jokes. Don't
Yes.
pick on me for that. All right. Take a small profit too early or a small loss too late.
small profit small profit maybe too early. Because the small loss kind of sucks.
I mean, yeah. First of all, our first
You could hedge the loss on like taxes or whatever, but I feel like for me personally, I can like set it, like forget about it. So like I guess I could take the profit early.
See, the thing is, but our number one job is to protect capital. So if we're protecting capital,
Yeah.
we'll take that small profit
Yeah.
rather than that small loss later. We want to protect that capital and grow it. That's our number one job, right?
Take
And
it
that's
out, reinvest it, take
that
it
one
out.
really hit me in the head like a hammer at one point. Like when they were like, "That's our job is to protect capital,"
Yeah.
and I was like, "Holy shit!" That's
Yeah.
like all these games we play, but at
Yep.
the same time, that's
Yeah.
really what we should always be thinking about.
I guess I never thought about
it.
it like that. But yeah, you're right.
That's one of those things that.
That's why you never sell when you're down and you wait till it goes back up because you're just like, I have to at least make the money back.
That could also be dangerous too,
Yeah.
though, right?
Oh,
that's how
because
you
just
want
keep
to put
going.
that bag,
Because it
man.
can keep going down.
That's all part of the game. Best trade you've ever made, skill or luck?
For sure, luck. All is luck, man. I just am like, oh, I like this stock,
It
and I'll just
almost
buy
always
it.
feels like luck.
Yeah.
No matter how much went into it, right? It still feels like
Yeah.
luck. To me, anyway. Maybe that's just, me being me. Favorite company / ticker? I think I already know this one.
What?
It's your SoFi. isn't
Yeah, I
it?
love SoFi. I don't own any SoFi now.
No, what's
I
going
don't,
on,
I don't
man?
know. I feel like
you should have at least like one share. Like,
I
token
know
to
I
see
have
it
to.
pop up in
I'm
your
always
thing.
like, oh, I'll buy it. I just haven't, and I feel
Right.
like because I feel like now it's still overpriced. Maybe that's why.
Yeah. But
Because
it's so cheap,
I
though.
bought it so cheap
Right.
that I feel like everything above that it makes
But
me
that'll
like.
keep it on your radar. It's always like
Yeah.
$17 now. Just
Yeah, let's see what it is.
I
Let's see what it is today. Let's see what it is right now.
watch a lot of Keenan Grace, and Keenan Grace is a big fan of the starter position.
Let's see.
And
Do I
it's
even
like-
have it? So let's see if I even have it on my favorites in SoFi, or in Robinhood. I don't even have it saved as my favorites.
Oh man.
So that means I have to now go here. So
Yeah.
SoFi Technologies is right now at $18.30. Oh, so it's more than what I bought it for, and I feel like I don't want to pay more than I bought it originally. So I bought it originally for like $15.
But
So-
all those guys on the SoFi Reddit, they all think it's going 120 or 200 or 800.
Oh God, no! It's a bank. It's not going. Like if you probably like let's look at comparison. I wonder if Bank of America. Their Bank is public
There's-
traded, right?
More than that, yeah. Yeah, they are.
Bank of America. Oh, I cannot find them.
No, it's definitely there. I did an option play with them the other day.
Or what is it called then? Oh, here it is. So Bank of America is $64. So there is a chance. There is possible. Bank of America has been around for like a bajillion years. So, and they're only at 64. So,
Right.
and SoFi I think needs to figure out if they're a tech company or a bank company.
Yeah.
Because the problem is they're getting into investing as well, which I don't like. And I did have invested amount in there too. And I was like, no, this is a banking app. I don't trust them with investing.
Right.
So, and also I think they're doing crypto, and I think they need to decide, like, are they a bank? Are they an investing firm? Can't be
Right.
both.
Everybody's doing crypto now too. All my brokers.
Everyone's doing crypto, and they're always. Robinhood really wants me to do crypto, and they really want me to get the credit card, and they really want me to sign up for their
And
plan.
you know what really bums me out? Like, I own Robinhood stock.
Okay.
And I hate the fact that every time we take a crypto hit, that they've got to take a hit as well.
That's true.
It's like, why? They're not a crypto. I mean,
Well, they do the
crypto.
prediction market. They're doing crypto.
That's what I'm saying. Like,
They
why
have a
do they have to be
subscription. Their
tangled up?
subscription is not worth it. I don't think it's worth the money.
not.
It's like because I think it's like $10 a month or something.
And they give you like what? They raise your.
They
your,
raise the API, APY, but I think I don't know how much it covers. SoFi's is worth it because it's $10 a month, and on $20,000 you get 4.5%. So let's round it up to 5% just for easy math. So that's what, like $5,000, no, $500, something like that,
Right.
or whatever, $50. So that's worth the spread.
1,000, right?
Yeah. So that's worth the spread
Right.
of the $10.
Right.
So like I'll take that.
Right.
It's like $1,000. What? It's like $5,000 a year or whatever.
Right.
So that's worth the spread of the $10. I'll
Right.
take that.
And so what is Robinhood
think-
giving you for that?
I think they give you a higher APY, and I think they give you have like a credit card with them, and I don't even know. Like they always advertise.
It's like
it for
level
me.
2 data or something? Is it one of the
I think
usuals?
they have like all these promotions too, where like you can. Oh, so here, Robinhood Gold is $5 a month, and I think they give you like obviously free crypto, and they give you like option trading, and I think they give you a bunch of other stuff too, and I think they give you a high APY on your savings account of 3.75. So I'm like, I don't know, man.
That's their higher rate is 375?
Yeah, they're high rates, right? Because I think their regular is like 0.02 or whatever.
Right.
So I don't know if it's worth it or not.
Right.
I don't know. Again, they're not a bank. They're an investment. SoFi is a bank. I want to use it for banking. I wouldn't trust, for example, I wouldn't trust Robinhood with my retirement account.
Right. And you can invest through SoFi
You can
now, right?
you can open up a Roth IRA with Robinhood.
Oh, really?
Yes, and I think they match. I think they had a point they were matching 1% or something, but I don't see them as that. I'd rather have my retirement account on a company that's been around for 100 years. So I'm a Vanguard. I have all my money in Vanguard. Hate them, but it is what it is.
Right.
Fidelity is really nice. I like their interface. Vanguard's interface is
people like
dog.
Yeah.
Like that's like a huge thing that I have a problem with.
Yeah, I've heard that before.
So, yes.
Cool. Yeah, I like all those things.
I like everything you said. Perfect. 10 out of 10.
What's your best trading habit?
That I invest, first of all, every paycheck. And I have also invest out of retirement, also pretty much every paycheck.
Do that. Do that.
Automate as much as you can. Automate savings, so you don't have to. As much as you don't have to touch the money that comes to your bank account, the better off you'll be.
Right.
Because you just won't spend it. 'Cause
Absolutely.
it's already gone. Like it doesn't matter.
Yeah. Worst trading habit.
I think I check too much. And I think I think too much. So I had a company, not a company, it was an ETF that I sat on for so long, and I was an idiot because I didn't buy it a year ago. So there's an ETF called DTCR, which is basically a group of REITs, which is real estate investments, whatever, that is data centers.
Okay.
They hold data centers.
Gotcha.
And I was an idiot, and I was like, "Oh, I'll buy this." I thought about it like a year ago because it was really cheap. A year ago, I was like, "Oh, well, AI. What does AI love? Data centers." And I didn't buy it, and I think it was like $10 or something. Now it's at $26, and I bought some now, and I'm like, "God damn it!" I was like, "I think that's the thing is I overthink. I overthink on like because I'm so risk averse." To buy S&P 500, I'll buy it all day. I don't care. But to buy all the extra fun stuff, it takes me way too long to think about it.
It's a hard line to find.
Because I'm worried. I'm always so worried. Like, oh, I'm gonna lose this money, and like, even if it's not a lot of money, it's like $100 or whatever. For me, I'm like,
No, you don't want to see that sitting in your account there, being like, damn it.
Yeah, I should have not done that. I
should have done that.
have done
waiting
that.
5 years.
Yeah.
Like me and a friend of mine bought into, what was it, A tier.
Okay.
They're a bio company, and it was just like they had 4-stage clinical blah blah, and then it went bad, and it was like whatever that investment wound up being worth, like 130 is what it was, and it's like still sits in my account. It's like
Because you just refuse to sell it.
yeah, well,
Tax harvested.
It's still recommended as a hold by
Really?
like everybody because they think they're going to do something. But
Even during COVID, they didn't go back up, or you bought it after COVID?
this was after COVID,
So you missed that.
so it's like
Bill Gates bought a company, or invested in a bio company just before COVID, and then COVID happened, and he made like $100 million off this company because they started like selling masks or something. And I'm like, bro, did you not start COVID? Are you sure? This is not a conspiracy. I don't believe that. I'm just joking around. Bill Gates is great.
not touching
Even though
it.
this is an Apple we're filming on, so it's fine.
Yeah, not touching any of that. But yeah, that's weird.
Yeah.
That's definitely weird. All right, where are we at here? We're rapid fire.
We did.
Day or swing trade, take small profits.
Yeah, we did.
Best trade you ever made. Favorite company taken. Best trade, worst. Favorite trading book. Do you have a favorite trading book?
I read The Boglehead.
Oh yeah, was that any good?
Yeah, I liked it.
I've never read that.
I read it because it talks about like how the whole Vanguard thing started, and he at the beginning it was a lot of companies that he like would walk around like stores and be like, oh, there's there's this company here that I see a lot of people buying, like Taco Bell and things like this. So that's how he like kind of started. And like he obviously did this math and whatever, but I think a lot of the companies that he was purchasing when he first started like buying mutual funds and stuff is he would look around and see what people were using, and that's how he was buying, which I thought was really interesting. Obviously now it's Vanguard's like $1.2 trillion worth of investment, but that's how he kind of like it was cool.
Right.
It was
That was Peter Lynch's thing was kind of that too.
Yeah.
Right. He was
Yeah.
kind of just like stuff that I just liked. That I thought was good, and people told me was good. And
Yeah.
It's does that work as well anymore? Do you think?
To buy things that you like.
Yeah.
I think obviously a lot of the companies are at astronomical values.
That's the
so
thing.
it's really hard to get in at the ground floor for a lot of companies. Because a lot of companies I don't think will want to IPO anymore. They just get bought out.
Right.
But I think if you want to buy companies that you use, I mean, again, you can buy a broad-based index fund and you'll get everything anyway.
Right.
But if you really like, I really like SoFi. It's like the company. I use it. So why not every time someone uses it or someone signs up, technically I make money off of it too.
Right.
So I think, yeah, if you like a company, if you like Apple, some people are Apple diehards. Instead of buying the new iPhone next year, put the same $1,500 in Apple stock.
Right.
You'll get you'll get 3-4 shares. Why not? Then wait, and then you sell it, and then buy the iPhone the year later. Like,
Right.
if you
and
want.
still have that money left over that you originally put into it,
Yeah.
and be able to buy the iPhone.
Yeah. So I mean, if you
absolutely.
like, I think, because investing is I think finance in general is very personal. Mm-hmm. So you also it's not all about investing for retirement and doing a budget. I don't do a budget, for example. Like, I probably should, but I don't. But it's not all about budgeting and saving. It's, you have to enjoy it too. So if, you go on that vacation, but if we're talking about invest in things you like too. Buy some stocks you want.
Yeah.
If you want to do prediction market, you want to do DraftKings, go for it.
Prediction market.
Yeah.
Get out of my broker.
Yeah. Don't use the prediction market in Robinhood, so they get rid of it. Use it in a different app, Polymarket.
Or don't use it at all.
Don't use it at all.
Go put that money in a stock, man. Like, own a thing. Own a
Yes,
thing.
but again, if you want to have fun, and you're
It
like,
is fun owning a thing.
correct, but you own it. But if you buy S&P 500, you own that thing. Or if you buy
You own lots of things. That
you
feels
own a lot
even
of
better.
things. So
It's better
again,
than the
if
football
you want,
game.
if you want to burn, $100 because you can on seeing who's going to win the Super Bowl in 2020,
Right.
whatever, 2027, go for it. Like,
When they put it in Mumu, when they
oh
added,
god,
when they
they're
added
gonna
it,
do it too.
When they added it to it,
Moon
they
was
were-
probably like looking at it like, man, there's some money
Yeah,
in
no, they
there.
added it to it, and they were like, "Hey, man, we'll give you $20 to go bet on stuff." And I was like, "All right, I'll take your $20 to go bet on things."
Well, I guess they probably, I think they scam you on that too. I think
Do
they
they?
purposely make you win.
Oh no, I didn't win.
Oh, you didn't win? Because I heard someone did it, and he's like, "Oh yeah, I did really well."
Well, I bet
and then
on.
and then when I started putting my own money, I started losing.
Right, I'm partially Portuguese, so I bet on Portugal in the FIFA
Okay.
in the World Cup, and then they lost.
Well, obviously.
And so I lost
I
my-
would have bet
I
on
lost
Portugal to
my-
win the World Cup.
I mean,
Their whole team has been
I didn't
thrown.
know shit about it. I didn't. This is the first year me and my wife watched all that. We watched the whole entire World Cup.
I was on paternity leave for the whole World Cup.
Right.
So that was my schedule. That's how I kept the schedule of my life. Is this like World Cup? I was like, okay,
Yeah.
there's a game at 8 in the morning,
We
and there's a game at
watched-
2, and there's a game at 9.
When we started, we didn't even understand how the scoring worked, and we watched every single game in the whole entire
Wow.
time. We watched every damn one. Close.
Yeah,
I mean, there were
I
times
see.
we were doing other things while it was on.
Yeah.
But we did. We were there for every single game, and we had a great time. So that's why I bet on Portugal. I was just
My TV worked overtime during the night. Like,
Right,
that was
yeah,
nothing.
ours too.
Like, poor my wife, dude. We'd have dinner, and then baby would go to sleep, and it'd be game at like 9 o'clock at night, and I'd be like, listen, there's like Uruguay versus fucking Cape, like, I don't know, like like Morocco or something. Both those teams are great.
Senegal.
So Senegal versus Bosnia or something tonight. We got it. It's going to be a great game.
right.
Fantastic. Messi is playing, so we got to watch Messi.
Right. So yeah. So TLDR of that was that I lost, and I
Yes.
was like, I hate that feeling.
Yeah.
Like, even though it wasn't my $20,
Yeah.
I was still like,
I get it.
I lost that $20, and I'm mad about it, and I don't.
But think about
That's exactly how I
much,
feel about that.
But think about how much money they have to be making to be able to give you $20 to lose. That means on the back end they're hoping that 20% of the people, because the 80-20 rule, which I've been using a lot lately for a lot of things. So like 20% of the people are putting in thousands and thousands of dollars so that they can afford to just give out money like, here, take it, because they're hoping you're going to get addicted.
Right. Bastards.
They know. They're not stupid. They're not stupid.
But I did not like it. I did not enjoy
I
the
can
feeling,
imagine.
and I will not go back.
I just don't
into
get it. And I just like how there's a bunch of like stories coming out like when Maduro got kidnapped or whatever, that some Navy SEAL bet that he was going to get kidnapped and he made like $400,000.
Yeah, there's a ton of these stories now.
Dude.
There's like people, yeah.
Like, come on, man. Like, because there's no stops on like who can do it, like
Well,
who
what was the
can't.
thing with Trump with the teleprompter? That guy, his teleprompter
Oh
guy.
yeah, I heard he made like $1 million. He made a ton of money too. He made
Something
like
stupid. He got in
yeah,
trouble for that.
Yeah, he made like $900,000 or something.
Yeah,
like
it
that.
was something dumb, but he
The
cheated.
craziest one was during the World Cup. Someone bet, I think Cape Verde was that team that wasn't supposed to win, but they did really well. that Spain was going to not win that game, not lose but not win, and some guy made like $1 million or something crazy off that bet because he just he put like 10 grand on it that Spain wasn't going to win that game, and he made a ton of money, which I think is insane.
Right.
So obviously you get lucky like that, and then like what do you do?
What do you mean?
What do? You pay taxes and fuck off, like for, like that's what you do.
You're right.
I'd be shocked.
Yeah.
Then you lose it all because then you're like, oh, I can do it again, and then you do it again, and then
That wouldn't be all right.
Yeah.
You know that's going to happen.
Yeah.
You know that's what they're
That's what they're hoping. That's what they're hoping.
We'll get it back. There's the next thing they're going to.
Yep.
That they're going to want more from.
Yep.
They're going to want that high to be a little bit higher.
Yeah.
And
But I feel like if you win that type of money, like there's no high that could even match that.
I don't know, man. I imagine that going for that 10 mil
Yeah.
is going to be the thing that they're like, dude, we can do this. Well, what are we going to bet on? I don't know. See, like I said, I'm not a gambler. In
Yeah,
that way,
me
so
neither.
it's
I
hard
have
for me
no
to
idea.
But it's
Every time if I ever went gambling, I lose money. I'm like, ugh, ew, gross.
It's still exactly.
We went to Vegas. So my wife and I, in 2019, we came to the U.S. to get married here because it's a little easier to get the green card if we get married here. And we went to Vegas. We didn't gamble at all. Went to see a show. We had dinner. And that was it. We didn't go gambling. Nothing. Didn't even. We went and rocked around the casino, but like, I didn't pull out anything because I was like, I don't care. I don't like it.
Right.
It's not interesting to me at all. I like seeing other people gamble
Right.
because that's always fun because you see like characters for sure.
Mm-hmm.
We went in Oklahoma. They have the casino. I saw some kid. He was like 22 years old. He had like a big cowboy hat. He was like a country boy. He pulls out a wad of cash, like huge, like this, and he puts it on like the roulette. And I was like, bro, like, is that your money? Is that Dad's money? Like, whose money is? If that's your money, that's a lot of money to lose. Like, you have to be okay. He's probably an oil kid or something. I don't know, but probably works on the oil field or something. But because that's what they do. A lot of the people that work on the oil fields, I guess they go like gambling and stuff, and they hope they lose it all. But I was like, that's so much money.
Man.
My dad like was handing me $100 bill, and I was like, no thanks. Like I'd rather not lose that for you.
Yeah.
Like it's not even my money, and I like was like, no thanks.
No, it doesn't feel good. I'm with you on that one. Not everybody feels that way, but I definitely, And then they had that whole thing. Like New York is suing Kalshi now. Did you see that?
No, I did not see
They're
that.
basically saying you're running an illegal gambling thing. Like
Good for them.
You can't, and it's New York. You're like, all right, good deal.
Yeah.
I don't have a big problem with that.
No,
I
definitely
don't
don't.
think there's anything good
Definitely-
for society coming out of that.
No,
other than
for sure, no.
Pockets being lined.
It's literally eating a society from the inside out.
Yeah.
There's no reason I should be watching any sport and just all DraftKings. And I guess CNN is like owned by like Polymarket now or something, or like they're partially owned and by Polymarket, so there's always ads for that stuff. Or one of the betting's websites. So I'm like, this doesn't make any sense.
It's weird.
And that's how like we are now getting our like knowing who's going to be president of the United States, or how it is based on like that's what they look at. They look at the prediction market on who's winning, which is crazy because like.
Right, because they're the most.
Oh, I guess it makes sense because it's real people taking votes. So I guess like it probably does give you a good idea, but like the news is the news. Shouldn't be any influence on like what's like it's objective. Like it's either happening or it's not happening.
Right. Did you ever see Idiocracy?
Oh, great movie. And again, everyone's like, "Oh, this is what's happening now," and I'm like, "Yes, it is. Everybody knows this, and it's been happening forever." And
It's been happening. They
been
make fun
happening.
of Crocs. Crocs happen.
yeah, Crocs are a real thing, and people love their Crocs. And you can be
I
a guy
like my
buy
Crocs.
even little Crocs are great. I don't own a pair, and I really want to, but Crocs are great. They have the little
Yeah,
now
I
they have
like
stickers you can put on it and everything.
Yeah, what are they called?
People go to the gym with Crocs. I'm like, that's
Oh,
really dangerous. And
That's not a good idea.
No, really dangerous. I don't know why you do that, but they're probably very comfortable.
They are. It's just they're easy. It's
Yeah.
just for little runs and stuff. They're
Yeah.
the best thing ever. But yeah, it's just I don't know. It always comes. Every once in a while something happens and I'm just like, why is that? That was a joke. That
Yeah.
wasn't. It's just so sad. The country's really. Anyway, we can leave that alone. Let's get back to MythBusters here.
Yep.
A stock that has fallen 50% is more likely to go back up than keep falling.
Oh God, no. It could keep falling. It's not more likely. It's like 50-50, I guess.
Yeah, that's
Stock
false.
market.
A past decline alone does not create an obligation to rebound. The future depends on new information, fundamentals, positioning, liquidity, expectations, and market conditions. Also, after a 50% loss, the stock needs a 100% gain to
Yeah.
return to its starting price, as you know. Key concept, avoid anchoring to the old price. And, that's all 100% true. But it's like you look at one of the rules of technical analysis is like things want to keep doing what they're doing.
Yeah.
So it's that's a trend is a trend. That's why
Yeah.
it's called a trend, and it
Yeah.
will most likely trend until it doesn't. But
Yeah.
until it doesn't, it's going to keep trending.
Yeah.
And so there's that simple thing to it. But that's a good one to know. If a company reports great earnings, its stock should go up.
No.
Should. What does that mean even?
No one deserves anything.
And it's obviously false. Markets trade on expectations.
Yeah.
A company can report objectively strong results and still fail if results or guidance are weaker than what investors had already priced in. Conversely, ugly results can produce a rally if the market feared something worse.
Yeah.
So, yeah, and it just seems like those things mean less and less. People's feelings.
Because
about
everything is so
things.
overvalued. Like PE ratios are like 30, whatever, and like what is $1 billion today? Like $1 billion is not a lot of money for these large companies.
Right. Right.
Was like when you have people that are worth. I'm not against the billionaire class. If you want to be a billionaire, be a billionaire. I'm saying if you have people like Elon Musk. I made a post on LinkedIn that I'm closer to net worth than to Mark Zuckerberg than Mark Zuckerberg is to Elon Musk. Because Elon Musk is worth $700 billion and Mark is $200 billion. So there's a $500 billion spread between them. So what is $1 billion anyway? It's not even a real number. It doesn't it's so small that a company making $1 billion is nothing because companies are being bought out. When Facebook bought Instagram for $1 billion, it's insane.
Right.
It's insane. But, companies are throwing that around like it's nothing. Like it's pocket change.
Right.
So, for them to lose $1 billion is $1 billion. If you have a market cap of $1 trillion, like Apple, it's $1 billion. Nothing.
Right. I'd like one of those billions.
Oh, yeah,
I'd like to have
for sure.
one.
Give me half. Give me half.
Yeah,
half.
I'll split it with you. We'll get one and we'll split it like an apple.
We'll do the lotto. That was like $420 million or whatever.
A high price stock is more expensive than a low price stock.
What?
A high price
Okay.
stock is more expensive than a low price stock. I mean, I guess by the simple definition, yes, it is, but
Yeah.
not really.
Yeah.
I mean, it
No.
all depends on
Other
what you
stuff.
put into it, right?
Yeah.
False. Share price alone says almost nothing about valuation. Share
Yes.
count matters. Market capitalization is share price multiplied by shares outstanding. And valuation requires comparing the business and its financial performance with the price investors are paying.
Yeah.
If everyone knows good news is coming, buying before the announcement gives you an advantage.
No. Because everybody knows.
Right. Generally false. If information is widely known, as you said, market participants can trade on that expectation before the event, incorporating some or all of it into the price.
Insider trading, maybe?
The eventual reaction depends on how reality compares with expectations.
Yes.
All right. And that finishes that segment of the podcast. And now we get to move on to the one thing. And I guess we've kind of talked about this a little bit already, but it's a great question anyway. And especially if anybody's lasted this long,
Yeah.
you deserve this. What's one thing that every new trader should understand before they risk real money?
It's okay if the stock market goes down. So if you're not doing single stocks, it's okay if the stock market goes down. Don't hop off the roller coaster. Don't hop off anything because it'll go back.
Yeah. And very often when it comes back, it's going to go higher than it
Yes,
was when you started.
exactly.
That's, really, look at the charts of what you've invested in and look at what to expect. Look at what the drops have looked like over the past year or two. And then so this way you're not, it could happen as soon as you invest. And it seems to happen often.
Yes.
Right? You press that
Yeah.
button and it's literally like, minus $5.
Yeah. So actually that happened to me. So I got the Trump account for my daughter, and they gave me $1,000.
Oh yeah, lucky.
Yeah.
That's so cool.
Great. Fantastic. Will I put more money into it? No, it's because it's government run, and I don't trust the government to handle my money.
Right. But it's Robinhood, right?
No, he has a. There's an app. There's an actual app.
But it's Robinhood underneath it, though.
Oh, I have no idea.
Yeah,
oh,
it's
it is?
absolutely Robinhood.
Did not know that.
Yeah.
Did not even look into that.
Yeah.
But the government is handling it.
Understood.
Don't trust them. So, and anyway, it's like a weird, not really tax efficient at all. Like it doesn't grow tax free or anything
really?
else. Yeah, it's worth it after they hit 21. Then you can convert it to a Roth IRA or something. So then it's worth it because
Gotcha.
then it will grow tax free from there. So I got the $1,000, and the day after, the stock, the S&P 500, dipped. And I lost $10 or something. And I was like, of course.
Right.
I mean, it's
Do
free
they-
money, but still, I thought it was funny.
Do they give it to you with with that ETF already bought?
Yeah.
Okay,
so
so
it's already I signed up like a year ago when he announced it, and I had to stupid. You sign up and you put in your email, but they don't send you anything. And then you re-sign up, and I signed up when it came out on July 4th, but it took them forever to like actually get back and like and approve you and whatever.
Right.
So and then they just deposit $1,000 in, and that's it. And
Nice.
it's automatically invested.
Fantastic.
Yeah.
You're the first person I've heard that's actually taken advantage
Yeah,
of that.
dude, it's
and
free
I'm
money.
always telling my wife deals with people with babies and all the
You
time.
can actually
And I'm always
open one
like,
up for if she's under 18. You
Yeah,
can
but they
open
don't
one.
give you a grand,
They don't
though.
give you a grand. They give you a grand.
That's the good part.
Yeah. The grand is worth it. If you have a child, that I think it's between when he's getting elected and when he's supposed to get out of office. We'll see what happens in 2028. But until then, you get a free $1,000, and it's worth it. It's free money. It's like 100% return of
do it.
whatever. Like,
Having a baby soon, just do that.
Yeah.
Get the free $1,000 for your kid. That should turn into much more than
yeah,
that.
I think like if you don't touch it and don't invest it when they're 65, it's like $63,000, which is not a lot of money, but.
But it's a lot more than nothing.
Yeah, but again, at 21, you can pull the money and put it into your own investment account, and then you can have it grow tax free.
that's-
So even at 21, it'll be a few $1,000s. So why
You
not?
have a fantastic seed investment.
Yeah,
I think
and again, if
start
you
on.
have investments going, I think it's one of those things that like if you have like a ton of extra money, and you're doing all the investing and you're doing all the extra stuff, and you have extra money, and you want to throw, and you have a kid. And that's you got $1,000, even if not, and you want to throw some money in there, why not? Like, you can.
Yeah.
I think you can max out like $5,000 a year or something like that.
That.
Yeah, but I would only put money in there after like my child's 529, which is the educational savings account. So for her, so I'm doing that now too. But after that was fully funded and I had nowhere else to put money, then I'd probably throw it in there. But right now I don't have that type of I'm not going to put it in there. And I don't trust the government to handle
There's
it.
that. I understand. I'm with you. All right. This is the last part. Parting wisdom.
Okay.
If there's one thing you'd like to say to all the baby bulls out there as parting wisdom to help them, what would it be?
Just do it. Just start today. $50 a week, $50 a month, $100 a month, whatever, no matter what your age is, start today and try to figure out a way to automate it. That automatically comes out of your bank account a week, a month, whatever, or from your paycheck, week, a month, whatever. Now, a lot of these companies, a lot of companies that you work for, you can actually set what bank accounts you're getting paid in. So, best case scenario is that you can automatically half part of your direct deposit will go into there and then automatically invest.
Yep.
That would be the best case scenario. Worst case scenario is you physically have to go in and transfer the money, which I do on some stuff, but everything else, I don't touch. I don't touch anything. Everything goes direct deposit, comes out to wherever it needs to go, and that's it.
Heck yeah. Heck yeah. That is fantastic advice. And I hope everyone out there takes
Yeah.
it because
Yeah.
you really should.
Super
if you're
easy.
new, just do those things. Just do them. And then
Yeah.
live free later. Just
Yeah.
be free. That's what this is all about.
I promise
right?
you won't miss the money.
Yeah, you won't.
You're
will
already
not.
paying.
And,
You're already paying the average American is paying $700 a month on their car,
right.
on a car payment, something like that. Yeah, something like that.
Man,
If you didn't have a car payment, do you know how much $7 a month is for 30 years? Millions of dollars.
No, it's unreal. It's
Millions, and you're already spending the money, so why not give yourself the money?
Yeah, and we talked about this briefly in the last one, but like, I don't know. This probably hasn't been this way your whole life, but you see how now they sell cars. They don't even sell them based off of what they actually cost.
No, it's-
they sell them based off of like what they cost per month.
Yeah.
And you're like, hey, this car's $700 per month. This car's $400
Yeah.
per month. You're
When you
like,
see an ad,
what
I
the
try to
heck?
look. When I watch like I see a car on TV, I like look at the small print to see if
doesn't-
I can see
Yeah, it's
how much
not
it costs.
even there.
And it
It's
says
not
like,
even
and it's
there.
like in small print, it's like, oh, you get the 0.9% APY, and then
still
you
doesn't
pay.
tell you how much a damn car
Yeah,
costs.
but it's in the small, it says amount of money, and it says like $50,000 for like a Kia Sorento, and you're like, well, first of all, cars are way overpriced, so you're like, I'm not gonna pay $50,000 for a Kia, but
But it's so weird. It's so weird to me. Like,
well,
when
because
I-
that's what people do. Like, they ask how much can you afford, and that's what they ask.
I was a kid in the 70s, and like you never. I mean, that's all you saw was like how much a car cost. We
Yeah.
grew up knowing how much like cars cost.
Yeah.
Like, oh, this one's
But now you see how much a car costs, and you're like, oh god.
right.
You're like, I remember when we first moved here, and I was shocked. We went because we just went to different dealerships. We ended up buying from Facebook, but I was just curious, so I just went to the dealership. I saw a Honda Civic for $45,000. It was a Honda Civic Type R, so it's a nice car.
Yeah.
But $45,000 for a Honda Civic is insane. To me, like, that's not an everyday. You can't, like, you're a regular old Joe Schmo that needs a car to go to work. Like, you don't have the money to pay 45 grand.
Right.
But they'll get you into the car. You'll just pay 80. And I talked to some guy when the new Corvette came out, and also were looking for a car.
What are those now? Like 140, 150?
Well, he said it was 90 something, and he said people are doing 84-month term. And I'm like,
Holy.
if you can't afford to buy the new Corvette, you like shouldn't buy it.
You
like
can't afford to pay 84 months of
that's
it either.
crazy. 84 months, like your car. That after 5 years.
Why wouldn't you want a little house instead?
Yeah, first of all, a little house. Second of all, after 5 years, that car's not going to be worth anything because it's not like these cars aren't going to be classic cars.
Right.
Like it's not a Ferrari or whatever. It's it's a Corvette C5. Like it's made of plastic. Like it's not going to be worth half of that in 5 years.
But they're selling them.
They're selling a lot. They're everywhere. Yeah, at 84 months. Just every time I drive, sometimes in the parking lot of my job, payment.
Avoid that car. You don't need that thing.
You don't
There's
need
so
that
many
thing.
cars you can buy out there that
Get
are
a
cool.
Toyota, Corolla off Facebook
Get anything
Marketplace.
that you can afford to just pay
Yeah.
for outright.
Yeah.
And be done with it. And then take all that money and do other things.
And it's hard. I'm not gonna lie, it is hard to buy a car.
Yeah, no, it's challenging.
So,
but it's also challenging to pay
Yeah.
$800 a month for 82
That's
months
true.
or whatever.
I think the problem is people are like, what I always see as a new parent, I always see, you'll see this on TikTok a lot. A lot of new parents are like, I need an SUV. They have one kid. They need a brand new SUV. They need the Suburban or they need the minivan. I'm like, do you really? I have a SUV, a crossover SUV, a Kia Seltos, okay? Tiny. It's really small. Like the stroller fits in the back and that's it.
Right.
It's fine. It cost us $12,000. We bought it for some lady. Actually, interesting story. So the lady we bought it from, it was a salvage title car, but it was salvaged because it was stolen. So nothing. There was no mechanical issues.
Gotcha.
Nothing. It wasn't an accident. Just the window. Like someone busted out the window and she fixed it. And the police found her car, brought it back to her, and then she already got the insurance payout for it. So she leased the car, and she was like, "Now I want to sell it." So we bought it for $12,000,
Right.
and it had 20,000 miles on it or something. It was a brand new car.
Nice.
It's a brand
Yeah,
new car.
Fantastic.
Yeah, so I mean, it was a great purchase, and I'm planning on driving that thing into the ground.
Yeah, and that's a great lesson right there.
Yeah.
Just like, take the time. You might have to struggle for a little bit, but take the
Yeah.
time and find something that you can
Uber
afford.
is so much cheaper. If you have to Uber
Yeah. And then
every single day, it's cheaper to do that than to buy a car, to finance a
you've
car.
essentially saved yourself a tiny house worth
Yeah.
of money
Yep.
in the end that
Yeah.
you could, easily add to and turn into a normal size house.
Yeah.
And do that instead.
Yeah.
Or just, invest it and watch it grow forever and
Yep.
buy your future freedom.
Yep.
Well, it was great talking with
Yeah,
you,
it was
man.
great talking
It was
with
a
you
lot
on,
of
too.
fun. I had a
Yep.
good time with you.
I'm
It was a
glad.
great conversation. Everybody learned a whole lot.
I hope so.
We will do this again. We will do this
Comment
again. If you would
below.
like to come back,
I would
please
love
come
to.
back. And now is the first official trading of the bulls. In the first one we had, there was just the returning of the bull.
Okay.
This one comes with the trading of the bull.
Ooh.
Would you like the darker bull or the lighter bull?
The darker.
Okay. Here you go. This
Oh,
is your
thank
permanent
you.
bull that you
Thank
get to
you.
keep.
Oh, maybe
But you
next
have to
time
get
if
back
I'm
a good
on,
one.
maybe next time I come on, I'll bring this one. I'll bring this one.
So
over.
the goal is to have, I think this is a work in progress.
Yeah.
I think we're going to put them on a little 2-inch block.
Did you 3D print these, or did you order them on?
We ordered them, but they're 3D printed. Somebody 3D printed
really
them.
nice.
We just thought they were really cute.
Yeah.
And I have a 3D printer, but it's not multicolored, multi-fiber, or whatever that thing is called. And it just does one color. And I thought maybe it would be cool like to print these out
Yeah.
and paint them. They might be a little, I don't know. We're still working it out. But I think a little wood block. Oh, you get a sticker too.
Ooh.
If you want a sticker, this is what would eventually, because I figured you deserve it, because it would be on a little block and it would be
that'd
like
be
that,
fun.
And it would be cool if it said something like official baby bull guest or something. I don't know. We're still working it out.
Okay.
But
I'll put this
you
on
can-
my
You
Stanley.
can make your own.
Put on my new. My wife bought me a Stanley for my birthday. I'll put it on my Stanley.
There you go, man. So we
you.
appreciate you coming out,
Of
man.
course.
We appreciate you coming out. It was a great time,
Yeah,
and
come again.
we'll see you next time.
Yep.
We'll definitely have you back, man. Appreciate
you.
you. You guys have a great night, and we appreciate you hanging out.
Comment, subscribe,
Yeah.
watch
and
for more.
Invest. Go get
invest.
it done tonight. Do it tonight. There's no reason.
Comment, tell you what you want to see.
Robinhood.
Maybe
I
you
don't
want to
get-
see next time.
I do have stock in Robinhood. I can't even say I don't have stock in Robinhood. I do have stock
I feel
in
like you have so much stock in Robinhood.
It's not that much. But Robinhood, just use Robinhood. Or if you want to be really cool, use Moomoo, because that's the one I love. I love Moomoo. Once again, don't pay them either. Or
Moomoo is
Webull.
owned by the Chinese.
All three of those are good. Webull, yeah, man, that's okay.
Yeah, that's true. That is true.
That's okay.
That is
They're
true.
all good.
No,
The
they're all good.
interfaces are fantastic on all three of them.
They're all easy.
Yeah, if you're brand new, do the Robinhood thing. All right, guys. We'll see you next
Yep.
time
Thank you.
on the Baby Bull Club. Thanks for hanging out.
New to the market, got no loot. Feeling nervous, feeling cute. Baby Bull Club, yeah. Baby Bull Club, yeah.